All right, so in the section, this is the area so far we've done. Your question 1A is on consolidation, question 2, IFRSs, question 3, final accounts, question 4 is on ratios, your question 5 is strictly on 2 areas, in fact even 3 areas, A, B, and C, 10 marks on conceptual framework. Then they can do ethics 5 marks and other IFRSs 5 marks, or even ethics can be 10 marks. So these are your questions. So in the morning, we started with your ethics and then the ratios. So today, I intend to look out for the final accounts, and then we move to the game. So take notice of the situation. All right, so to start with, I have to start scanning through your question 1, consolidation. So I'm doing consolidation now, question 1, and I'll do your question 3. Yes, for tonight. Then let me do your question 2, IFRSs. Your IFRSs, I've dealt with some of them, and there are specific questions you have to look out for, please, with your IFRSs. This material, you have to hold it with care. Even if you come to level 3, you must still hold it with care. Please, anytime you see that there's a fluctuation in the internet, please let me know so that I can quickly deal with it. So these are your ethics and your conceptual framework questions and your IFRSs you have to look out for. That's all. You'll get question on IFRS 15 revenue. Try as much as possible to look at it for me. You get questions somewhere centered on this. And then you move to the game. Investor property may visit us. You may get a question calculation, not theory, on IFRS head for sale calculation. So take notice of this. Head for sale calculation. Yes, and then the theory came last sitting. So revenue review. So the latter part of the IFRS in it. The only thing I don't have in this material is the IAS 23 borrowing costs and then earnings per share. It means that I have to send you additional documents on those ones. Last time we did them, so look at them. So the only thing I don't have in this is IAS 33 earnings per share and IAS 23 borrowing costs. You have to look out for those two standards in addition to what we have here. And then we are free to go. All right, so confirm for me that my sound is very clear at your end. No issue with the sound, please, to ensure quality of the delivery. You can hear me loud and clear. Just confirm for me that the sound is very fine.
Sir, target.
Yes, please.
Target. Please,
yes,
please. It's clear. The sound is low because I've made my volume very high to the last device, a bit low.
Is it better now or still the same?
Yeah, it's yeah. As you spoke, it came.
Okay, so if it is clear now, then I think we have to continue the game. You confirm for me that. All right, so this evening I'm interested in consolidation, another share banker area. Your consolidation question won't be difficult at all. So I'm going to prepare a list. I solve one question. Look at last sitting was a balance sheet. This sitting, you're going to get a P&L console or both P&L and balance sheet. So I'm going to solve a P&L and balance sheet console for you from the consolidation material I've given you. That's your question 1. When I'm done, I'll do question 3 for tonight from now to 10. Then it means that I leave the IFRS section and then I may come back and come and then look at it for you. All right, so I'm done with the section. Okay. All right, so let me go straight to the game. Question 1 is consolidation. You may be asked to do theory or calculation for us. So theory 5 marks maximum. Theory 5 marks maximum. Calculation 2 will also be 15 marks, maximum of 20. So let me go straight to that side for you. Not this one. Yeah, so these are the consolidation theories. You have this material with you. Make sure that you make good use of this material. So first of all, there will be theories on consolidation, and those ones I provided them for you here. This one is here. Element of control. What are the elements? Explain and justify what determines the element of control. Very important. Now you need a solution, right? 5, existence of control. For exceptional case of control and when parents will not be allowed for consolidation. Even if I should come to your last sentence question, I may be able to tell you where it is coming from exactly. Let me just tell you where your last sentence question came from. This last sentence question. This is called Takwa and Awaso. Takwa and Awaso. It's a balance sheet question. Okay, so that is that. That is very well. I'm going to pick one expensive, tough question on both P&L. So take notice of that. So this is your intervention material. Open with me. And let's go. Tasco and Angel, another one. Last sentence question look like yeah, Tasco and Angel. Let me go and choose the figures of last sentence so that when I see the same figure somewhere, this question is like look like ACC pass question 185 and 93. I'm back 185, 93. Sharp. Let me check. Okay, so space phone, I'll not do this one with you. I'm only solving one particular question. Yeah, so you may end up getting questions of this nature. So try as much as possible to do question 5 for me. Question 5 for me. or question 4, all of them are in the same neighborhood. All of them are in the same neighborhood. Fiezo, Zaytuna, and Mediama. This is, I may do this one with you. This is November, yeah, November 2018 question. That's when this question came. All right, so all these ones are in the material for you. Sinyane and Brekum. Okay, so let me do one of these for you, and then that's all. So take notice of your question. So your question will be centered on a full P&L like this, or a balance sheet and P&L at the same time. Balance sheet and P&L at the same time. So take notice on the game. Now in consolidation, there are basic principles that you have to look out for. Consolidation has a basic principle. So for balance sheet consolidation, what do you have to look out for? When you go, they give you a question. For balance sheet, like last city's own, this last city's own. If you go and meet a question like this, what do you do first when you go and see balance sheets? Whether balance sheet, whether P&L. First, you read the requirement. There's something called RAT. Target, RAT, and RAF. Read the requirement first. Additional information, trial balance, or the financial statements. Read the requirement first. Read the requirement first. So first thing, prepare consolidated financial statement, financial position for TAQA as at 31st December 2021. So over here, first thing, you go and write it there, go and set the tone. So if it will be exams, right after reading the requirement, you go straight to your answer booklet. Let exam now. I'm doing question 1. You say if it's AB TAQA group, then say consolidated statement of financial position. As such, they'll code the date for you. Your reporting currency, check, it can be in thousands. So write the requirement first. So right after reading, if you do this, you get 2 ticks for 3 ticks free. The name of the company, TAQA Group. And this one, many people don't bring the consolidated financial statement. Mark them down. Please try as much as possible to follow with this, our simplest, let's say, instructions here. Bear with us with our simplest instruction. And then that is all. All right, so let's go. So right after setting the tone like this, what do you do next? Right after setting the tone, you now go and read. You see, you confirm the acquisition So there are small workings that I want everybody to do. This one like this. Go and be sure that there's what control, even if it's balance sheet. For balance sheet here, you don't need to worry about whether it's a mid-year or 2 years acquisition, or 3 years, or 4 days, 1 week, a month, 2 months, 6 months. Balance sheet has nothing to do with those ones. Once you say Takwa acquired 80% of Awaso equity by means of immediate cash payments acquired. However, the the former shareholders agreed to return some of the consideration by 30th June if Awaso sales growth falls below a defined threshold. We call this one defined consideration. Sorry, contingent consideration came. Here's it. Contingent consideration. The examiner is very good. So once we've established the fact that there's a control of 80%, and they have to tell you the date in which that acquisition took place. So the date in which that acquisition took place, so that you can know whether you are doing consolidation for full date. If you get that information clear and you are doing balance sheets, the rest of the food, don't read it. Here's it. So Takwa Limited been operating a clothing textiles. Clothing. No. This question is familiar. Clothing and textiles industry in the past. On July 1st, 2021, it acquired Awaso Limited. So now tell me, their balance sheet date is the 31st December. So from 1st July to 31st December, how many months, how many years? From 1st July to December 2021, 1st July to 31st December, please, how many months, how many years?
6 months.
Good. So consolidation should take place 6 months. But for balance sheet, we don't prorate. You can't say that you are taking 6 months of this asset and this. No, we don't do that. So for balance sheet, do line by line consolidation. What you do is that anytime you go, there's a balance sheet there. This is how we consolidate balance sheet. First of all, without reading the footnote, no, don't go and waste time and read the footnote. It will take a time from you. A better time in here. Wait, I better go with you. Yeah, shut up, we've intentionally do it. Calculated, so we better read this. No, that's not how we answer console questions in exam. This is how we answer console questions in exams. First of all, after setting the tone, confirm. After confirming it, start. Write here non-current assets. When they move, you move. When they stop, you stop. So write here non-current assets. Non-current assets. Underline it. There was one item, don't forget, give a space. You have to give a space for 3 items on your balance sheet. 3 items, they are foreigners. One is goodwill. So write here goodwill first. Now when you go to the next asset in the question. Line by line. Line by line. Oh, they even say non-current. So you see, they wrote assets. So you must also write assets in your answer booklet. Let me write it for you to see it. I'm sure. They wrote assets, so you must also write assets. What you see is what you write. Write here assets. Then under it, you now write your goodwill first. Then they wrote non-current asset. They wrote non-current asset. Open a bracket. Shortcut are not allowed in exams. We beg you. Say 185,400 plus 93. First thing, that is what you have to do for us. So 185,400 plus 93,000. Don't close it. Line by line until you are done. There are 3 items that you have to create a column for them. Number 1 is under the non-current assets called goodwill. So you do line by line consolidation. When I solve the other question fully, we get it. So let me go to the first. So line by line. So this one, count the item. So here you open a bracket, 185 like this, 400 plus 93. Don't close it. Leave it. Go to current asset. Even to the same thing, 76,200. You're on your answer booklet too. 76,200 plus 31,800. Don't close it. Leave it. Other current asset, the same thing, 58,200 plus 24,000. The examiner is aware, that's why it's not bringing plenty items. Under the equity, don't consolidate the subsidiaries own. Do not consolidate anything here. We transfer it. And equity to the asset to non-current asset, make sure that any consideration paid are taken off. We don't also consolidate that. We don't also consolidate the consideration. So line by line. So here to equity, only the parents own 120. Retained earnings, call it group retained earnings. When you reach here, just call it group retained earnings. Oh, this one, don't bring it again. Oh, this one, don't bring it again. We don't need them. Then instead of them, we write NCI. That's items number. This number 2, you have to write. Number 3 is this one. That's all. Non-controlling interest. Then you continue the journey again. Deferred tax. Here, there's no footnote will affect deferred tax. Add 30,000 plus 4,000. This one you can put answer and you can close it because nothing will affect it. So 34. You go line by line. Current liability to the same thing. 66,600 plus 61,200. That's all. This is what we expect you to do right after the requirement. So now, if we are to mark this, the heading you wrote correctly, 1 tick for you. The name of the company, 1 tick. The currency correctly written, 1 tick, making 3 ticks already. Now let's count. Plus 1, 2, 3, 4, 5, 6. 6, 7, 8, 9, 10, 11, 12. So I've gotten 12 free ticks. I'm not worried about it. Sometimes you have to get 20 ticks. You have gotten 12 free ticks. And a tick can be 0. Let me go and check this particular question. What's a tick for a mark for a tick for you to see it? Fill it agodi. You see that the 34 I wrote there is still the same here. It doesn't change. Nothing will affect it. You see the trade and other payable I wrote, nothing affected it. So this one like this, 1, 2, 3, 4, 5, 6. So you get 2 additional ticks. Those that there's no footnote to affect. This is the marking scheme. It's only the PP that a lot of things will affect. And then some of the so you see that what I told you not to bring it. After the share capital, this one is called group retained earnings. NCI, you are done with the question. Nothing else, nothing more. And these things, you must know them before you enter the exams. And that is all. So let me go and check the examiner what the tick he gave out. I'll walk you through. The examiner how many ticks? I think it's 0.25. So I think it's 0.25, not 0.025, please. It's 0.25. Examiner, please. It's not 0.025. It's 0.25. Good. 80 ticks. Now let's come back to your solution. You score how many? 12. So please multiply 12 ticks by 0.25 for me. How much are we scoring? just after reading the footnote, doing some skirmish on the balance sheet, how much are we scoring? Please come again. All right, so sorry about that. Please, how much are we scoring? Tell me. 12 times 0.25. Imagine you do this. How much are you scoring?
3.
3 marks.
3 marks.
8. 12 times 0.3. No, 0.5. That's 3. So upon everything we have done here is 3 marks. Everything we've done here, that's 12 ticks. Everything here. You see, there was a time that when we add, they were getting exactly half of the marks. So some of the examiners were not happy about that. So they decided to change that style. And here we are. So you have to be very fast about it. Just be very fast about it. And then that's all. So 3 marks. That is, if you don't touch anything in the footnotes. If you don't touch anything in the footnotes, you're getting yourself 3. So this is 4, 6. 6, 7, and then 9. No, it should be much more than that too. It's not really count it too. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It should be 15. If I add 15 times 0.25. But so you need to be 15 times 0.25. 3.75. Let's say 4 marks. 4 out of what? 20. So even if you don't touch anything in a foot, previously, now you're supposed to get 8 marks, 8 to 10 marks. If you don't touch anything. And then you can sign the examiner, not you. Then he has done us this into it. So I'm done. So let me go and solve my question. I'll pick a question that have both balance sheet and P&L so that you know how we can consolidate both of them. And then that is all. So take notice of that. When I'm done, I'll come and solve this particular question. P&L, only P&L with you. And then that's all. Where is it? Where? Okay, so that's all. So take notice. I'll come and do this with you fully. And then that's all. All right, so let me go straight and pick one question which has both P&L and balance sheet at the same time. For us to do. And then you are free to go. Do I have something like that here? I do have both P&L and balance sheet at the same time. Which question is that? Both P&L and balance sheet at the same time. Both P&L and balance sheet at the same time. No, You don't have some in this material. You don't have some in this material. Okay, if you don't have some, this question I've dropped several times. Let me do this one. Okay, so there's one recent one. One recent one. Just a minute. Let's go. Let me solve this particular one with you first. Then from there, I'll go and scan through the remaining one with you. But I have to do P&L and balance sheet at the same time. Not just the other one. Just there's a question called examiner call me which question? This examiner is so interesting, pal. I love what he's doing. You see, always the question I solve, that's the form that comes in exam. So there's always the question I solve, that's the form that you get. So I have to also do the same thing for you. Conquer and Zeus. So where is it? Okay, so let me go to Consolidation. That was a dangerous year. This is May 2021. Let me do both P&L. Just a second, let me come here. Thought I've added it to your question. All right, so let's try looking at this question together. It's called Kingdom and Paradise. It's have both balance sheet and P&L. So even if I solve this question, I'm okay. Because even if you go, only P&L come. This side is there to help you do the one that will come in exams. If you go, only balance sheet also come. This side is also there to help you do your balance sheet. If you go, all of the two are there, you don't lose. So strategically, these are questions that close to the exams, you try hands on. So that is that. So an exam condition, this is what I expect everyone to do in exams. Everybody. Right after reading the console question, you go straight and read the requirements to be sure if it's a console question. They say A, prepare consolidated statement of profit or loss and other comprehensive income for Kingdom Group for the year ended 31st December 2019. That is what they've asked you. So that is it. So please take notice of that. And then prepare consolidated financial statement, financial position. So this is what you have to do. Just flow with me and I look at it together. First, solution. Tell the examiner. If this is your first page, I'm assuming that this is your first page. See how in exams, you see, you have margins. Yeah. This one I have to let you know. Do not write in the margins. Don't write here. Don't write here. We beg you. Don't also write at the top. Don't also write the beneath. You don't want a situation whereby you come and tell us that you have written something somewhere we cannot see. Anyone that writes here, if you write here, we can decide to -2, -5, -5. So at the end of the day, marks now, we are cost on air, so you have to tell Ganka. If you are entro, Ocho, you better. Not that we are marking you down, and no, we don't write there. If you write there, -5, So count the number of times you have mistakenly written at the margin here and multiply by 5, subtract, add it back to your marks that they gave you. That is it. So there are a lot of things they don't tell you that they penalize. So take notice of the game and look at it, observe it for us. Here we write your scores here, a line by line score. So if you come and write here, we cannot write your score. So if you don't want us to write the score, then be writing there. We beg you, don't do it. So let's assume that I'm solving this question. The margins are there. All right, they normally write a question number here for you. They'll type the question number here. So just write question 1. Here will be A. Write the name of the company. In consolidation, if you write the name of the company, Kingdom Group, right? Kingdom Limited, use the name of the parent. So parent group. So right here, parent, Kingdom Group, Kingdom Group. So that's what you have to do first. Follow me and be safe. Kingdom, in terms of consolidation, Kingdom Group. It's Kingdom Limited Group. Kingdom Limited Group. That's all. We are done. Kingdom Limited Group. There is a consolidated what? Consolidated statement of profit or loss and other comprehensive income. Other comprehensive income. Write it in full. No shortcut in exams. We beg you. Some people in official report, you see shortcut inside. That's all. All right, so let me continue. Okay, so let's continue. For the year ended, I want to solve this question fully with you. Pray hard that will come. November 2020. Pray very hard. How many years so far? 3 years. Yes, okay. You're writing November, right? Oh, okay, November. Good. Please, if everybody give me numbers and figures, you move fast. I'll solve this question fully. If everyone give me numbers and figures, I'll solve this question fully. So let's go. Which year in question is that? 31st of December 2019. So let's go. Fast. For the year the 31st of December. (2019). You check the year Now, next section you do is you check the currency, the reporting currency. Please, the reporting currency is very important. When I see plenty notes like that, I'm very happy. Now I have a lot of things to work. You see, they have raised 3 zeros. Some of the questions they raise million. Some of the questions they don't raise anything. They just give you Ghana City Sakula. Some people, the question that they solve before they enter the examination hall, that is what they do for us. So question that we have not raised zeros, they are raising it. Question that we have raised millions, they are even raising zeros. So copy what you see here there. It's Ghana cities in thousands, not in millions, not Sakola. Ghana cities here. When you do this, you have scored yourself 3 free ticks for yourself. 1 tick, another tick here. When you're done, you go. Leave enough space so you go for your P&L. Full page will be okay. Just a full page is okay. Balance sheet too, usually the same. If I'm in doubt, you can leave balance sheet, you can leave 2 pages, or P&L 2 pages, but all of them. But for me, with the Zoom whiteboard, I need enough space. So for you, you need. Then you go to the next page. You write the question number here. So question 1B. Kingdom Limited Group. And line. If you fail to write a consolidated, you are in trouble. So say consolidated statement of financial position. I'm solving this under examination condition. No. As at 31st of December 2019, reporting currency, Ghanaian cedis in thousands. You see, Ghana, we normally see cedis like this, or Ghana cedi like this, Ghana cedi like this. Which of them is official currency? Which one? Is it the first, second, or the third one? Please, which of them is official currency? Any banker among us to help us?
First one.
The first one.
Yes, sir.
Eh,
Yes.
just sure.
That's the CD sign.
Yeah.
Eh,
Yeah.
oh, okay. Uh, eh. And to give to you agree. And then
Yes,
give.
please.
Wow. Okay.
Yes.
All right. The first one is the one that we changed. This is the 2007 currency. This is the current one that we use. Just that because the sign CD here, they still use this one. So officially, Ghana cedi is this. So that's why if you see some of the questions, they go by this official currency. Just that because they have documented, they still use the sign. This is the one with the plenty zeros. 20,000, 50,000, those ones. You see, Nigeria, they still have their zeros. They thought plenty zeros make the money. heavy. So it is, but this is not examinable in ICA. No, forget it. If the examiner writes currency CD, you can also make it this way. Let me see the one the examiner use. So they use this one. They use the old one. No problem with that. I'm done. So please, it's not a problem, cry. Don't worry if you interchange them. Yeah, I don't call. But just copy what you see and be free. So I'm done with the consolidated financial position as a December. Then you leave enough space. You say another question. Your next page, you say question number what? 1. Say workings. Then you start. How many minutes will it take you to write just the requirement? You score yourself 6 ticks. Just this requirement, 6 near Marco 6. Free of charge. So let's go. Right after this, what do? Confirm 2 things for me. Go and do workings number 1. Workings number 1. Confirm workings number 1. Leave it. Workings number 1. Workings number 1. Number 1A. Have a standard workings 1A for you. 1 workings 1A. On Monday, by this time, I will ask you, so we are working so 1A and now. Okay, say the Annie and me Jow. Okay, said there'll be 1, yeah. That's A as a 1A, 1B, and 1C. Linear free text. Question 1A. It will workings number 1A is called group structure. Do that one first. Write a parent name here. Kingdom Group. Kingdom. Write a subsidiary here. Paradise. Kingdom. So write a subsidiary name here. Paradise. So right here, Paradise. That's a subsidiary. Paradise. Go to the question. Wherever you can go and read the acquisition story, read it. If your group structure and everything's go on well, hey, you can finish the question within. So you see, the console where people get it, they will start reading the whole story, and when they finish, they don't know where to start from. No. Here you are even solving the question before starting reading the other areas. What a wow. What a wow. What a wow. Follow this for us and you'll be saved. You don't have enough time. So go straight. Console acquisition story normally start from the top. Here, there's no important information. Let's go down. You need the date and then the amount acquired. Kingdom Limited acquired 60% of Paradise, of the share capital of Paradise on 1st April 2019. That's all. It's enough. This one alone is enough. That's all. So go straight. You see, you want to complete the story, right? You don't need to complete the story before you can come here. No, please. So right here, 60% here. What about a non-controlling interest? NCI will be how much?
40%.
That's all. NCI will be 40%. The other material did not come. No, the other material itself, nobody have it. It did not come. So NCI will be 40%. So right here, NCI, 40%, 100%. If there's associate, sometimes there'll be associate. Give the name. Maybe associate percentage range between what? 20 to 40. So you can have maybe 30% in an NCI will be dash. You bring it. That is if there is associate in a question. That's how you do it. Associate is where you have investment from between 20 to that of 20 to that of 20 to 40, 49. That's all. And then that's all. All right, so basically that is it. So what do you do again? Let's go to worklist number 1B. This is what I expect you to do in exams. I will ask you, did you do it? You tell me, yes, target, I did. It's okay, no problem. Let's wait for the results. That's all. All right, so the next what you have to do is that you go to what you call effective date of acquisition. Just write date of acquisition, date of acquisition. Please, this is what you have to do first. So right after the requirement, this is what I expect you to do. Don't go and read any footnote. The thing is working. You are working. Check the word they wrote. It's a working. Working time. That's all. So working. The date of acquisition, when was the date of acquisition? Tell us date of acquisition. So 1st April 2019. That's all. Go and put it there. One thing for you. 1st of April 2019. So take notice of that for us. The third examiner, 1st April 2019. So right after reading the requirements, you just write the headings. The parent group, one, and then the rest. The first working is to just tell us the group structure. Then the workings 1A, 1B way, a balance sheet two, a PNL, what do you obey, which you must obey. 6 in here, Makumako, 1, 2, where marking now. 3. Yeah, come back, 4 ticks. 4 solid ticks. So working 1C, we call it period of consolidation. Period of consolidation. If the examiner said we acquired a guy many years ago, just write many years ago. For period of consolidation, you need to know from this date up to the reporting date, how many years, how many months. That's all to the reporting date. So go back to the question. What is the reporting date? The reporting date is 31st of December 2019. So from 1st of April to 31st of December, how many months? Don't feel shy to count your fingernails.
9 months.
Good. 9 months. Do you agree? For me, I can see 8 months too. Who will support me?
No one. It's 9 months.
It's 9 months. April, May, June, July.
It's
August,
first April.
September,
If
October,
it was
December.
30th April,
Yes, it's first
and it
April.
would have
So
been
9 months.
So today, dear, I'm working alone. Eh?
oh.
No problem. So that is all. You see, very interesting. Exam questions are very interesting. So this is 9 months. So just write here 9 months consolidation. If it is more than 9 months, what do you do? Like 2 years. Just write 9 months consolidation. 9 months consolidation. One equal a free. Where they whether P&L or balance sheet, one tick. So just right now, you're getting 4 ticks for free of charge in question, working one. Over there now we had 15 plus 4, making 19 ticks. Then we are going. All right, so that is that. So that's I'm done. So now that you've established the fact that it is 9 months consolidation, it's if it's more than 9 months, let's say 2 years, just write full year. Right? Full year. That's all consolidation. Then you want to free of charge. Just a work date, you know. Now more than 12 months. Don't waste your energy and say 1 year, 12 months, one. 2 years, 3 years, just write full year and go. That's all. Leave it for now. Now that you have confirmed that it's 9 months consolidation, make sure you have a stable internet too. Now that you have confirmed that it's 9 months consolidation, let's start the actual work. Go. When they move, you move. When they stop, you stop. You've already written the name of the company, the requirement, reporting currency for P&L. For P&L, you do 9 month consolidation. Please, P&L, you have to do 9 months. So it means that P&L, you do 9 month consolidation, 9 months. Balance sheets, the financial position. Now we have to take everything full. We can't prorate it. So for P&L, it must be 9/12 of the subsidiaries item times the subsidiaries item for P&L. For balance sheet, you have to take full because you can't divide the computer into months. But for P&L, you can divide. I will show you a particular footnote in your case. A good examiner should write something. They'll tell that, okay, assuming that all items in the P&L accrued even. If you see that note per is a mid-year, let me go and check if the examiner did that. It's a clue in every question. Assuming, go to the latter part, that's what we normally do. Get to the latter part, oh, it's here. Assuming that all items in the income statement accrued even. If you see this one per, that means the thing is less than 12 months. Less than 12 months. So be careful. Oh, if you see this in a question, that's what it means. What a wow. That means it's a mid-year acquisition. Examiners are very good though. Let's continue. So now, start line by line. When they move, you move. When they stop, you stop. From the P&L side. When they start, you start. So we are going to be very fast. I don't know. Should I send this year question onto the group? Someone should download it on the website and upload it on the page for us. November 2020. So that everybody have a copy of it. All right, so can you put it on the FR page for us so that everyone follow? So you open, just open a bracket. For those of you you open parent own 125,000. Let me clean this side, everything here. Parent own. So parent own 125,200 plus the subsidiaries own. Subsidiaries own, you have to take 9 months or else you will not agree. So this is what you have to do. Say 9/12 times 60,000. Don't close the bracket. We don't do that. You are not done. Open it, leave it like this. Line by line, revenue. Do the same thing to cost of sales. Profit, don't bring it. So let's work it hard. Please, do everyone have it on the page? Good. Did you all have it? Let me see if I can share with you. Can somebody just good, you've done well. Some you've done well. So now everybody have it. Good. Please, you open it so that we can read the figures whilst I write on the board. Fast. And then we go. So you just, if you have a 2 device, it will be very good. If you have the past question, it will be very good. So that I don't be sharing it again. All right, so now everybody have it. So let's go. That's what I'm doing. Now from revenue, so write your revenue. What they move, you move. The root revenue must also write revenue. Revenue. If you think it will not go there, start your addition from the down. 125,200 plus 9/12 times what? 60,000. Don't close it, leave it. Go to cost of sales, right here, cost of sales. The same show, open a bracket. Sometimes cost of sales, if cost of sales workings are plenty to not go there, go and do working. So W something and bring it. But for the meantime, let's consolidate cost of sales. That should be 91,600 plus 9/12. Here you have to be very fast. Times what? What's the cost of sales for the subsidiary? Cost of sales for the subsidiary.
48,000.
Good. 48,000. Then you don't close it. Don't close it. You're not done. Go to the next one. They wrote gross profit. You to write gross profit. When they move, you move. When they stop, you stop. Write your gross profit. When they move, you move. Like this. You see, I have not started reading the footnote. No. I just don't want to confuse myself. If you go, this is what you have to do. Be very fast over here. Very fast. The next item on the list, what did they do after gross profit?
Distribution cost.
Right here, distribution cost. Here, I can tell you that this one is almost or always free. What's the figure? Parent own is
4,000.
Subsidiary
2,400.
I'm happy to announce it to you that distribution is mostly free. So here I can assume it's free because we set questions, we set and we know items that we normally adjust where distribution is always free. So we can even decide. I'm not the one who said this particular question, but I can tell you that distribution is free of charge. But I'll leave it open for security reasons. Next item on the list.
Administrative
expense.
expense.
Good. When I open a bracket, what's admin expense?
7,000 for the parents. 3,600 for the subsidiary.
9/12 times 3,600 for the subsidy. The next item on the list, when they move, we move. When they stop, we stop.
The
Finance cost.
Okay, so anytime you go to finance cost, leave a space. I'll tell you what you're going to do that space for. Before you go to finance cost, make sure that you leave a space. That space can come either before or after finance, but myself, I love it if you leave it before finance cost. Anytime there's other income. Okay, good. I have an idea. You only do this when there's associate in the question. If there's no associate, don't leave it. Write it somewhere. If there's associate and you have to do consolidation, because you have to take parent share of associate profit. So whenever there's associate, before you bring your finance cost, leave a space. We call it, write it down, we call it profit from associates. That's all. Anytime there's associate in a question, who is associate? When parents have from 20 to 40, 49% is an associate. So 30%, 25%, 40%, 45%. If you see such thing in a question. But here, we've not read all the footnotes. So me, what I'll do is, I'll still leave that space over there because I don't know what the examiners will do. Leave one line there. If you leave one line there, nobody penalizes you. Let me go to the next item on the list. Next item on the list.
Finance cost.
Finance cost. So let's go. Please, finance cost, what's the amount?
400.
Plus 9/12 times.
Plus nothing.
Oh, they don't have some.
Yes, Paradise that has.
Oh, okay. That's so good. This one, leave it for now. Maybe there'll be another one coming in the footnote. So don't close the bracket now. Please don't close it now.
Okay.
We are stealing marks. If you go the questions like this, the question have a lot of issues like this. If you do this one, you can stop. You can get exactly half of the marks. Now let's go to the next show. From the what you go to, the right profit before tax, right?
Yes, sir.
Profit before tax, must also write profit before tax. Next item, income tax.
Income tax expense.
Income tax expense, good. I'm happy to announce to you that it's also a free income tax expense. This was the figure.
6,200.
Plus 9/12 times what?
Plus 9/12. 2,000.
Yeah, I can ask you to close it. No footnote will affect it. What do you get? You see, there are certain items they are free. There are certain items they are free. This is what you have to do under exam condition if you are solving consolidation question and the examination.
7,700.
That's all. That's all. And show. Don't be
Okay.
panicking that I've not read a footnote. There are certain items they are free. Distribution cost number 1. Income tax number 2. Admin any free. Admin unrealized profit a bit puimbia. Additional depreciation a bit puimbia. Eco admin. PUP if it's on sale of PP eco admin. So admin is not free, but distribution is mostly free. Next item on the list.
Profit for the year.
Profit for the year. They also write profit for the year. Next item on the list.
Other comprehensive income.
Other comprehensive income. Good. So other comprehensive income. So right here, other comprehensive income. For the meantime, you can just say parent owned, right?
Yes.
They wrote another thing under it, right?
Yes.
And they wrote gain on valuation, right?
Yes, sir.
On valuation. You open a bracket. What's parent owned, subsidiaries owned?
Gain on evaluation for parent 3,000, subsidiary nothing.
Okay, so we leave it for now. If after going through everything, there's nothing, they come and close and put the 3,000 there, they'll mark it for you. What a wow. But here they will not mark this one and come and mark this one. No, no. That one they take notice. You mark only the other one. You get it.
Okay.
You see, when the movie move, from there what they do again, they say total comprehensive income, right?
Yes, sir.
Total comprehensive income. Comprehensive income. Then they wrote a figure here, the double underline, which you double underline, you're done. Then when you're done, you have to share. Many people earn it here and they lose some marks. But here, me myself now, I advise that you leave it here. And there was a particular setting, I took my time, explain to them how they should share the profit. You have to share the profit. Many students don't do it, and I support them because I'm always supporting students. But one particular setting, I took my time to teach them how to share on the intervention date. I can't remember the November 20. There was a particular year I took my time to let them go through. That was the year when they asked them to share the profit for 5 marks. The examiner just asked them to share it. So take note. So here you have to share. You have to share 2 profits here, profit after tax. So say that right after this, right? Profit. This one is for those who want to score 20/20, and for the overall best students, please. Profit after tax. After tax attributable to then right here owners, or you can just put the parent. What's the parent name? Owners of. Parent name is Kingdom, right here, Kingdom. Then right here, NCI. Then go and share the other comprehensive income too. This is for those who want to score 20/20 and overall best students. If you want a gentle pass, you end it here. Don't continue. End it here, that's my humble advice. End it here. Ube pass and yeah now ube pass. Ube pass also pass mark no also. We just adjustment. And if your figure over here is wrong, if your profit after tax is wrong, don't even bother yourself. If your profit after tax or profit for the year, this figure here, if it's wrong, don't bother yourself to come and do this for us because you're wrong. You're going to share a wrong figure. So why can't you just save that time, go and do another question to earn more marks? A strategy. But if you figure you're correct, yeah, continue, man. Come and take, you total it, you get a total. Come and take total comprehensive income. Total comprehensive income. total comprehensive income attributable to, they say, owners of, mention the parent name, Kingdom and NCI, then the total will come here. That's all. This side is not compulsory for everybody. I'm begging you, don't waste your time on this. Because the baby back chain, if anything makes your final answer wrong, you're going to share wrong answer. Now let's go to the balance sheet. Help me with the balance sheet too. When you go to the balance sheet, there are 3 extra things you must do. 3. I didn't mean answer.
Okay.
Yes, please.
Hello. Sorry, before you moved there, my network went off. I wanted to get something clear. You said where you have to use the months to divide by the, what do you call it? The subsidiary. Is it usually the information under the additional information, or you use it with what is on the trial balance? It's like just like the 9/12. Do you divide it by the figures on the statement that they're giving you, or use it with the information?
First, when you establish that, from the time of acquisition, from the date of acquisition, in this case, the date of acquisition is when? 1st of April 2019 to reporting period is December 2019. That will become 9 months. When you establish that it's 9 months, then that means that subsidy will be consolidated for only 9 months. Meaning take 9 months. So sales, you take 9 out of 12 because the whole year there are 12 months. And the guy came with you for only 9 months. He traveled with you for only 9 months. Because as at 1st January up to 31st March, you have not acquired him. So you take only 9 months of the sales. The sales figure 9 months. Cost of sale, everything in the P&L, 9 months, 9 months, 9 months, 9 months, out of 12 months. Agreed.
Yes.
Only the subsidiary.
Okay, thank you. Thank you.
Parent owned is full. It's like you have bought something and you are taking half of that item plus your own. Parent owned have to be full. Because for parent, he has worked. It's this guy that joined the group during the year. So everything here you pick 9 out of 12. This is full of parents. Okay, now let's go to the balance sheet. Balance sheet. Can you give me the balance sheet figures? Let's go. For balance sheet, first item on the list.
Assets.
When they move, you move. When they stop, you stop. When they jump, you jump. When they squat, you must also squat. They say asset, must also write asset. Some people, they have their own format in their head. We are just waiting for them patiently. When we twist our format small pair, they can't follow us and they use their own. We mark them down. You only solve what you see, not what you understand. Let's go. Asset, from there, where they go to?
Non-current asset.
They wrote non-current asset again. Oh, them to why? Them to why? It's a waste of time. Oh. Me like these exams, I don't normally write a lot of stuff. Oh. They like penalize me. I write a lot of stuff. Because time is not there. So next item on the list, what do you see again?
Property, plant, and equipment.
Have you seen the wrote it in full? You must also write it in full.
Sir,
Property, yes, please.
Target, please, you should leave a space for goodwill.
You, if you remind me early pound, it's good. Yeah, goodwill must appear. So if goodwill should be among the non-current assets. So if I've already written it and remember like this, then the next item goodwill must come. Either goodwill comes first or come down, or anywhere among the non-current assets, goodwill must appear. It doesn't matter if you write it first, second, third, so long as it's part of your non-current assets, enough. So this one, thank God you have remembered me early. Imagine you write finish and you not put goodwill there, you'll be in trouble. So property plant. Let's go and write goodwill first. Always try and put Goodwill first. Goodwill. Even if you calculate there's no Goodwill, come and put that share. That's all. It's not compulsory that. So just bring Goodwill so that as a gentle reminder. Next item PP, they wrote it in full. Please write it in full. Property, comma, plant, and
Equipment.
good. Open a bracket. Don't open that bracket here. From distance to here is too small. Over start getting. You better pretend it's in one day. You need one day that day. You better pretend you cry. You enforce your own every day. You're marking in one, but you're quite no. The more you mark, the more money you get. And of course, no one man keep it. Next time, you ain't frail. The back say we are lazy. And 4 days spending a day market, you're reducing the crampo. After 1 week, two to 3 weeks, I said IC and public resource, and young new students. Now I see raising new funds. So we waste time, I see and frail view. I said when I want in a way that we can see clearly. We are taking you. You know me, I'm for students, I'm not for the institutes. Now, open a bracket here. What's the parent own? Parent figure.
37,400.
Plus, can I say 9/12? No. Balance sheet
No.
item. And 9/12. Balance sheet, even if you acquire a person 1 day to the year end, you take everything full. I'm coming, no. If you buy a land and you pay fully, at sometimes there are certain things on the land already. Don't you enjoy it? You enjoy it.
You will.
Now, the land become yours. The same thing. You don't say that the land was just for me for 2 days, so I only take 2 days item. No, please. And we don't divide assets. PP balance sheet item, we don't divide them. So don't say that it's 9/12. Please, we are begging you. Please, God beg you. Balance sheet, 1 day cry, a full near fan. Asa. Next item, subsidy is in 27, right?
27,800.
Good. Don't close it, leave it. Next item on the list.
10% loan note.
Right, 10% loan note. How can 10% loan note be an asset? How can loan be an asset? I do it. What's the figure?
2,000.
It means I've not read the entire question. This is what it tells. It means it might sound like parent ama subsidy loan of 2,000. If you read it and that's how it is, we eliminate it. You cannot give yourself a loan. Parent and subsidy are one. You can't give yourself a loan. So that's all. Next item on the list, when they move, you move.
Parent assets.
Okay, you leave one space, then underline them. Underline. But you have to leave one space first before underlining. Why are you leaving one space? Because maybe there will be additional asset in a footnote you don't know. Come and put it there. You are creating room. If you leave one space before you write the total, no examiner will penalize you. Never. And don't economize our sheet for us. We will never forgive you if you get it wrong. Don't economize our sheet. Yes, man, we natural results. To be anyone small say, oh, save paper no, kaka. Why do you pay annual subscription? Why do you pay for examination? Me like this, me judge, me try like I said, just space room because handwriting ain't yet. There was one paper, the whole country, someone, the overall best student had 70, and I had 67. When my boss got to know the Asian, I was Fred, he said, your handwriting, and you little marks, handwriting, and I'm saying, Say me do to me handwriting now. So I write big bold, leave space. Do so please and please again. I'm begging you. Okay. Now go to the next page. Continue your current asset. That's me. But for your own, you will continue because your space will be enough. Please, what do you have? Current assets.
Inventory.
Right here, inventory. What's the parent? What the subsidiaries own?
8,600.
Plus
2,400.
next item on the list.
Trade receivable.
Trade receivable.
9,400.
Plus
5,000.
next item on the list.
Bank.
Bank. Open a bracket. Parent 0.
Nil.
Plus
Subsidiary 600.
we leave it for now. Next item on the list. They
Total
added, right?
assets.
Good.
Yes, sir.
They added the current before the total, right? Have you seen it there? So do like this. Leave one line after current as a leave one line. Add this before the total assets comes. Then write here total assets. So that means
Okay.
total assets will come here. Current asset is here. You get it.
Yes, sir.
Next item, what they go to?
Equity and liabilities.
Okay, let's say equity. When they move, you move. Yeah, you have to be very fast. Equity and liabilities. Question, where they move? But next item, what they write?
Share capital.
Share capital. We only pick parent own. Only parents. All the entire equity item of the subsidiary is exempted from consolidation. You can consolidate equity of the subsidiary. So write only the parent own here. Don't come and put it here. Write it here first. What's the figure?
20,000.
Yes, write it here first. Don't come and put it here.
Okay.
After reading all the footnotes, there's no share exchange in your question. Then you come and push it here. You are done. Next item on the list.
Revaluation surplus.
Do you have some for the subsidiary?
No.
Good. So write a revaluation surplus. Revaluation surplus. Open a bracket. Parent owners.
Parent own is 4,000.
Plus subsidiaries own. No, here we don't consolidate
Yeah.
anything under equity. Do not consolidate, but leave it like this.
Right.
When you're about to finish, right? You close and put it there, you close and put it there. That's all. Next item on the list.
Retained earnings.
Call it group retained earnings. That's item number 2. It's not free. So item number 1 was goodwill. This number 2, group retained earnings. Balance, you need 2 extra items, 3 extra items. 3. Goodwill, group retained earnings, NCI. We will be any assembly. Balance in this one. We are the foreigners. Hey, Okokwa now, yeah, master, forget foreigners. No. For parent subsidy, add them and go. Rest exam now. After the exams, you go and read the marking scheme. You'll be fine. Next item on the list. What did they do? Did they add it? They add, right? You try and also add. Next item. You have to be very.
12,000. The retained earnings for the group.
For that one, you have to go and do workings. That one
Okay.
you cannot add from the face. You do special workings. There are 3 people that one you can add. Goodwill, group retained earnings, and NCI. So the next item, well, this one we are not done. The next item is NCI. That's the 3rd item you have to bring 10 foreigner. So long as there's balance sheet in the question. NCI, you can get it easy. When you're done, underline everything here. But there's a way of presenting NCI. But for level 2, we don't penalize you. It's level 3 that we are just waiting for them patiently. When they do penalize them. NCI is not part of the group. So if you are presenting it, present its own separately. But for you, you do this way, will not penalize you. When it comes to corporate reporting, please make sure that you do your corporate reporting with us so that we break things down for you. That one, I'll let you know the right presentation, where you have to do it. But ideally, you're supposed to add everything first before adding NCI. That's all. That's the difference. Even though the answer is still the same. Good. Now the next item on the list, when they move, you move. You add, you got the total equity. From there, where they go to?
Non-current liability.
You write non-current liability. And the rate, what do we have?
10% loan notes.
10% loan note. Question, where the end of the exam or not? What should I know? I didn't do super pro. What do? You open a bracket. What's the amount? Parent
5,000.
plus 2,000.
2,000.
Good. This question in the old ICA question bank, the 2015 question bank. It's also ACCA past question. We call it FR group also. Those days, that was the question I used for my intervention. I'll check if I see it. I'll send it to you. Yeah. Now, what do you do again from here?
Current liabilities.
Okay, so right there, current liabilities. First item, what do you do?
Trade payables.
Trade payables. Open a bracket. Parent own.
6,800.
Subsidiaries own.
7,200.
The next item on the list.
Bank overdraft.
Bank overdrafts.
Yes, sir.
Parent own.
3,400.
Subsidiaries own.
Nil. Next is income tax payable.
Income tax payable. Let's go.
Yes, sir.
Income tax. If you meet it anywhere, it's free. Income tax. No footnotes are affected. The amount is
5,600.
subsidiaries own.
No. The subsidiary is 1,600.
When you add, what do you get?
You get 7,200. $7,200.
It is always free. If you meet it anywhere, that's all. They added everything, and the rest you leave it for now. So, first online, you can't order fix your score yourself. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 3 ticks here, making 21. Or 19 plus 3 is 22. Plus the P&L, 22. 23, 24, 25, 26. 26, 27, 28, 29, 30, 31, 32, 33, 34. 34 plus 3 will give us 34 plus 3, 37 plus the first working with it. That's 4 ticks. 37 plus 4 ticks.
41.
41. Yeah, you can even stop. They've not read any footnote to 41 free ticks. Imagine they get, let's say, 100 ticks. Imagine they get 100 solid ticks. So 41 out of 100 times 20 marks. What will be your answer? What will be your score? What will be your score?
8.2.
8.2, right?
Yeah.
Good. So here, you see, that's all. Well done. So if you earn your 8 marks, it's okay. The little footnote you do, then you are getting 10, 12, so I'm going to now, I'm solving this question at exam condition. This is what you have to do. Right from here, then I start reading the footnotes. If you are now what kind of footnotes, so we are what kind of footnotes. Now, we are want to ask, do not overstay in any of our footnotes. Do
Yes, sir.
not overstay in any of our footnotes. If you do overstay there, time now 1.5 minutes BI score 1 mark. 1.5 minutes BI is equal to 1 mark. So if you take a lot of time, trouble for you. Now let's now read the note slowly. I have to solve this question fully with you. It says that Kingdom Limited acquired 60% equity shares of Paradise on 1st of April 2019. The purchase consideration was settled by a share exchange transaction of 2 shares in Kingdom for every 3 shares acquired. The price of the Kingdom share price at the acquisition was 3. If you see parent share price, that means a share exchange. In a share exchange transaction, it goes to workings number 2. What a wow. Standard workings. If you go there's balance sheet, you must do 6 standard works. Workings 2 is called cost of consideration. Go and do it. That is workings number 2. We call it what? Cost of consideration. So the more workings you do, the more tax you are claiming from the exams. So third examiner, workings 2. Cost of consideration. Let me write it to us. Cost of consideration. That's workings 2. Now it's made up of 4 items, 4 to 5 items. Not every question that you see. So they be educated to then you get it. Some of the questions will give you this, some of the questions don't give you this, and that's all. All right, so that is all. Now, it's made up of cash, consideration, and share exchange, and deferred consideration and contingent consideration. F4. Sometimes when you move 3. Sometimes they'll give it to you. You don't have cash. Don't forget the reporting currency. 1,000. So share change. You always need the ratio. So here, take notice of this. Parent is given how many shares? Was settled by exchange of 2 shares in parent, in kingdom. Kingdom is the parent. So let that one be on top. 2 comes top. For every 3 shares acquired, let that one comes down. That's all. You are done. Now multiply this by the number of shares parent acquired. Parent acquires 60% of the shares, so times 60% of the total number of shares of Paradise. So go to the question. How many shares does Paradise have? Paradise, what's the number of shares? This is, each share is 1 cedi, and the value is 18,000. So indirectly or directly, the number of shares is also what? 18,000 for Paradise.
18,000.
True or false?
True.
If I multiply by 60, it will tell me the number of shares parent acquired from Paradise. And that is all. What a wow. Let's go. So the share exchange times. So let's go. So here it will be into brackets 2 out of 3 times 60% times 18. Whatever you've done here is the number of shares. Take notice, this is just the number of shares, not the volume, the monetary value. Now multiply by the share price of the parent at the date of acquisition, because it is a parent that is giving the shares to acquire the subsidiary. So those shares should be valued by parent share price. In the same question, we'll give you the parent share price and the subsidiary share price. Parent share price is 3 cedis at the date of acquisition. If you go there, they'll give you subsidiary share price too. Don't come and pick the subsidiary share price. Where is it? This is a subsidiary share price at the date of acquisition. Don't use that one, I beg you. That's why I have submitted it for you. But some people read all the footnotes before they start to, you see, I have not started the footnotes, all of them, but we are confident that what I've read is what we have to put in. This confidence is what you must get in the examination hall and do it. Don't be checking that I've not read note 2, so I can't do note 1. Who lied to you? Okay. Share price is what? 3 Ghana cedis. So please do the computation for me.
Okay.
Times 3 cedis. Now you now close it. The answer is
21,600.
so 21,600. Other consideration, you can have deferred consideration. So I am taxing you to know how to do deferred consideration. You will thank me later. And contingent consideration, I've done a video on all this. Contingent consideration, how to treat them. There are 4 in number: 1, 2, 3, 4. It is not compulsory in one question all these 4 should come. No, a selection. The players are much more than 11, but every match we need 11 for the start and substitute the remaining ones later. So take notice. Wait, a stronghold. Consolidation is stronghold. You need to swear a bit boy kakra. Essing IFRS is not kakra. So that's all. So I'm done. So yeah, just that's all. So continue reading. Don't end it here. Continue reading. They'll tell you something more. In addition, you are. you are. In addition, Kingdom Limited will also pay a cash consideration of what? How much is he going to pay? That means they are not even done. He will pay how much?
0.275.
Good.
That's
Pesos. Or examiner to why? Why do you bring CD and peso at the same time? Is that fair? You can't write 0.27 and still bring pesos. You see this? If you want to write in peso, write 275 pesos. This is how you write it. The question was picked from somewhere. And I'll try so I'll convert and I'll send it back. On April 1st, 2020. How many years now? We acquired a guy 2019 April. So 2020 we went. Please, 2020 we went.
1 year.
year. So we have to pay. We have to pay money again in 1 year's time. What name do we call such consideration? Deferred consideration. That means that consideration will not pay it now. Have you seen? I asked to go and look out for deferred. My no question in my solve. I didn't therefore. So how do you get it? So get the number of shares parents acquire, multiply by this figure, and find the present value. That's all. So they'll give you cost of capital. If you see cost of capital in any question, that means there's a deferred consideration in the question. Now, what do you have to do again? Get the number of shares. 60% times 18,000 will give us the number of shares, true or false?
Yes.
Then now multiply by the price. Please, if you don't understand anything, let me know. I want to finish everything in this question with you. Then I move on with my life. Now, so come here, there's a deferred consideration, not contingent. So the deferred consideration, open a bracket like this. So how many shares? 60% times 18,000 will give us how much?
10,800.
So that 10,800 shares times what? 0.27, is it 275 or? I forgot to know.
275, yes.
Now you find a present value. You see, present value, because this money, they are not going to pay it now. You have to find the present value. Using the cost of capital given to you. What you have to do is that you open a bracket, into bracket 1 plus 0.1. Raise to the power 1 if they will pay it 1 year's time. Raise to the power 2 if they will pay 2 years' time. Raise to the power 3 if they pay in 3 years' time. Here, raise the power will be 1 or 2.
1.
Good. That's all. So do the computation for me. What do you get? You are right. So what do you get?
$2,700.
2,700. What a wow. So you know the answer was 3,000, right? This answer is 3,000. The top one is 3,000, true of course. Supposed to be 3,000 or so. Now let's go. Now be sure that they are done, because the consideration should be 4. They say they are done. None of the consideration has been recorded by Kingdom. What a wow. Put the total together. They say none of them has been recorded. Put the total together. What do you get?
$24,300.
First thing, add the share element to the parent share price, parent share capital. So go to parent share capital and add it. So go to parent share capital and we now I requested for extra time. Oh, I didn't clean all the tricks I did though. Okay, let me do it like that. Plus, oh, let me see if I can clean it up. Let me see if I can clean it up. Good. So yeah, plus what? What's the figure? 21,600, right? Now
Yes,
peacefully.
for the
Now
parent.
peacefully close it. You get 41,600. Again, this figure, the closing balance, this one, you must add the unwind of a discount to it and send it to the balance sheet. So the next workings, call it still workings too. Bring this figure here, call it deferred consideration. Right here, deferred consideration. Balance brought down is 2007. Cost something unwinding of discount. What you do is that you open a bracket, multiply this 2,700 by the 10%, and factor in the 9 months. Factor in the 9 months into take time apportionment. Times 9 out of 12. This is what you get. This is what you get.
$202.5.
202.5.
Yes, sir.
Can we run it in the nearest whole number? That means this figure you run it
No.
Oh, okay. So 202. So make it 203, right?
Yes, sir.
Add it. What do you get? Anytime there's deferred consideration, this is what you have to do. Wait, okay, that's our tour. See, and it's a 1 year. 1 year is a year and TRC.
903.
2,903.
So 2,903. We echo balance sheet in the financial position. We echo P&L as finance cost. This one goes here as finance cost. Finance cost. So go and do the needful. Don't wait for you to finish all the workings. Now examine and know somehow extra time. Nafa post no. The finance cost. Where is the finance cost? Go to P&L. What's the finance cost? P&L. Finance cost, where is it? Yes, it's plus what? 205, right? This one you are done. Close it.
203. 204.
So close it. What do you get for your finance cost? 603. Do you get it? Now, this one, how many months for them left for them to pay? Because they will pay it in April. Let us do some small analysis here. They are going to pay this money in April. April 2020. We are in December 2019. Will it be a non-current liability or a short-term liability?
Short term. 4 months to pay. Left with 4 months to pay.
So that will be a current liability. So add this one to current liability because of the duration. So go to current liabilities. Yes, so right here, call it deferred consideration. Deferred consideration. It was the figure.
$2,903.
2,903. That's all. So that footnote, we are done. Then use your pencil to tick. I'm done. Clear. I can't go to proper calculate. Oh, you know 2. Let's go to note 2. You see how interesting it is. So after reading all the footnotes, you go close. But if the examiner said get ready to stop work, start to close, do I? Because some of them will be free, naturally free. I'm done. All right, so that is that. I can see that Osu Presec, they are very happy, pound. And I'm asking them, why are they happy? They say every Presec will be Presec. I said, no. Now let's continue. Let's go to note 2. Over here, you'll be fine. The fair values of paradise net asset and liability equal to their carrying amount, with the exception of an item of land. At the date of acquisition, with the exception of paradise property, which are the fair value. This one goes to workings number 3. So when we are reading it, it goes to workings 3. We call it net asset of the subsidiary, workings 3. So what kind of jive? And kind of answer what was so time in new. Note in your kind 1 to note 3. Workings number 3, net asset of the subsidiary. Wait, you see, net assets. I have a mature subsidiary. I hope a mature subsidiary be too fair. You better ring one amount. Yama Udin, your boss subsidiary needing the amount. You find the paradise. You can't subsidiary or question. You first subsidiary measure yourself. Many people do this. You some marks they be and can't move. You deduct marks, valuable marks. You deduct you can't move. So if you write it there, we'll mark you down. Nowhere you must write subsidiary. Write paradise. Because that's a subsidiary. Nowhere you must write parent, write kingdom. So net asset of paradise. That's all. Maybe right here at acquisition, at reporting. In fact, if you come to final level and you come to target professional consults, we'll start telling. Post acquisition, the reporting currency, one fan bar, a bet you me like this. I like writing mangoes and tomato. So I wait, if you don't bring it, I write there mangoes. Now why in here, that means mangoes. What's what 3,000? What's what 3,000 mangoes? That's what we do. That is why we don't give you your answer booklet. Because we know that if we make a mistake and give you the answer booklet, some of you are lawyers, or you have a family member that are a competent lawyer. They can take us to court and win a matter. We will not give it at all. All right, so when you do it like this, net asset of acquisition, you need this if there's a balance sheet. So this from workings number 2, 3 going, you need it if there's balance sheet or goodwill in a question. Take notice. Who can a balance sheet in a goodwill? And as a balance sheet, any goodwill, who hear what I'm doing. But who can a P&L who hear workings 2, workings, they don't need them, please take notice. Net asset is for goodwill or balance sheet. Okay. Anyone or both. If you go and you see balance, as long as balance sheet work question in there, work out with goodwill to be here. And as I sometimes we ask you P and L, near beside goodwill kakari ashase. Let me give you a practical example. Now what I didn't see here, mommy. Look at this question carefully. Your question, you know, see phase Zetuna and Mediama. A P&L to say here cost of consideration, net assets. But OSHA requirement now also prepare consolidated profit and loss. That's all. So here there's no need for you to waste your energy looking for what? Goodwill, net assets, and how P&L and how. But check questions like this. Check the questions before. Vim Limited also. You see, Vim Limited or say calculate goodwill. And P&L. The question is only on P&L. VM and NGR. Why are they car manufacturer VM and GR? It's only P&L. But the requirement have instructed us to do goodwill. But the requirement says we should do goodwill. So because of these 5 marks, you need workings 2, workings 3, and workings 4. But if this requirement is not there, you don't need any of this. Please take notice of this. I'm begging you. Okay, maybe let's go and continue what we are doing. So when you do your net asset like this, net asset is made up of the share, the equity side. So locate the equity side of the subsidiary. That is why we don't consolidate the equity side of the subsidiary. Go there and bring your share capital. So check the equity items of the subsidiary. Equity items of the subsidiary there. Help me out. First item of subsidiary under equity. What's the first item? Share capital, right? What's the figure over there?
18,000.
Good. So right here, share capital. You see, I've not read the other repercussions, but I'm not bothered. That is what you have to do. A man won't waste time with you are not bothered. It's okay. Even sometimes you waste time and think that how do I do it, but don't realize I must stop work. Even those that you can even answer it for us, you not even answer again. Please, that share capital is 18,000. Please, is it in the reporting, is it in the balance sheet you pick it from or footnotes?
Balance sheet.
It's in the balance sheet.
At reporting means balance sheet. So here, right? Balance sheet, financial position figures. All these figures here must come from the balance sheet. What a wow. All these figures here in the footnote. What a wow. All these figures here are this figure minus this. This one is equal to reporting minus acquisition. Please, it is not acquisition minus reporting. We are begging you. We use God to beg you. These principles, are the things you must understand before you enter the examination hall. Why that? So that 18,000 now share capital. Assumption be. We always assume that the subsidiary have not issued shares. Do you get it? After acquisition, subsidiary no own share BIA. Then whatever we have at the reporting, then it's the same thing at acquisition. True of us.
True.
That's all. So we assumed, and when they give me chance to set question, oh, my first question. After acquisition, the subsidiary have issued a new shares. The narrative of the story will change. So here it should be 18,000 because there's no share issue. So far, not even corporate reporting, not even final level, they've done it. Not even ACC have done it. Not even semi I've done it. I'm just waiting patiently. That one day, target to be an examiner, started setting questions. Now that we have our book, now that we have our books, some of our books contain our own questions. And then they'll give a chance. Target, come and set question. Yeah. Tell me like so. Maybe you must set the question. Come on. Now, what item do you need? Go to the subsidiaries equity items and list all what you see there. That's all. Because subsidiary also the equity item. Fanini Abra. Ubasha and 18th and the we air dash and trauma and family air dash. Only be. You only way be and shop. Retain earnings is 7,000. Bring it. This is at reporting, not at acquisition. So place it at reporting first. And let's go and search for the acquisition one. So write retained earnings here. Retained earnings here. At reporting figure is 7,000. I don't know at acquisition for now. I'll wait. Here I repeat, no examiner will give you. Go to the footnotes. The amount P&L and a balance sheet able back one. Safi go infirma. We are the infirma. We then we'll never give it to you. We expect you to work it out. Let's go. We are then infirma. If we should have given it to you, we should have given it to you at the date where we give the acquisition story to be note 1. The retained earnings at acquisition is always in note 1. You are done reading note 1, it's not there. It's always in note and note 2, note 3, how anyhow. Yeah, fair mom. So long someone show idea. How then do you get it? Very simple. I love this question. And the principle in here a bad one thing. Now, you see, our year end at December. We acquired a guy somewhere. Our years, if the year end at December, where will it start? I'm here, cancer, no, if our year end at December, where will it start from? Where will it start from? If our year end at January, good. So the year starts from January. When do we acquire the guy? When did the acquisition took place?
April.
April 1st, right?
Yes, sir.
So from this date to this date is called pre-acquisition. This is called pre-acquisition. This is called post-acquisition. Get the terms clear for us, okay? This is called post-acquisition. And this is called pre-acquisition. So how many months do we have for pre-acquisition? How many months do you have for post-acquisition?
3 months for pre-acquisition.
Thank you. And post-acquisition is 9 months. That's why we consolidate for 9 months. Agreed.
Yes, sir.
Now, get me the retained earnings here. I need the retained earnings of the subsidiary here. And I need the retained earnings also here. Only the mammy away. 1. I can get you the retained earnings at reporting is 7,000, true of us.
Yes, sir.
How do I get it at the beginning? Please, naturally, what is the difference between, if nothing has happened, what is the difference between the retained earning at the beginning and the end? What caused the difference? What and what do we add to the retained earning at the beginning before we can get at the end? What do we add? What do we add to the retained earnings at the beginning so that I can get at the end? What do we add? Remember.
Our profits.
Which of the profits? Remember, which of the profits?
Profit for the year.
Profit for the year. So they have added profit for the year before arriving at this figure. So if I subtract the profit for the year, won't I get the retained earning at the start of the year?
We will.
Good. So let's go and take the profit for the year. I love this question. You see, I have not read. I started reading this and I stopped because where I have to place it, I've not prepared a place for it. Don't continue reading it. It was a total waste of time for me to read this footnote because where I will place it, I've not prepared that place to go and put it there. To me, I'm wasting time. That now I'll come and read it again. It will cause a problem, man. That's all. I don't cause additional problem, man. So go and pick the profit for the year for me. What's the profit for the year for the subsidy? Profit for the year. 4,000, maybe.
4,000.
Okay. That's what. So the whole year profit is 4,000. So what's the return in this year? Say about 3,000, right?
Yes, sir.
Good. That's all. Who don't understand this? So I go over. Please understand this before you come to corporate reporting. If you come to corporate reporting class and you understand this, oh, wait, corporate reporting by class test amount, and FR is difficult than corporate reporting. Anybody that writes FR and corporate reporting at the same time, that person passed corporate reporting much more than FR. Anybody that writes advanced taxation and taxation at the same time, pass advanced tax much more than FR, much more than principles of tax. That's all. Because I know the principle in corporate reporting, at least you have the basics. Now, if the whole year profit is 4,000, can you break it for me? How much was earned in the pre-acquisition period? How much was earned at the post-acquisition period? Who can do that for me? That the whole year, the profit made is 4,000. The whole year profit is for break them into two for me. 9 months will be how much? 3 months will be how much? I love this question. But it's not 1 year there crowd. Question is also too much. We wait on the own reader. 1 year strategy probably once the time workers stop work, no matter what benefits. 1 year for resource now. Well, look at all this. This question is supposed to be a level 3 question. Your money will does too much. When I say 1 year west and your money does not offer problem amount. Will be your pen for almost say, any question over your mind. By the time you finish, you spend 2 hours. This is what you get pre-acquisition and post-acquisition if you share the profits.
1,000 for the 3 months.
And 3,000.
3,000 for the 4 months.
I want the retained earnings as
3,000 for the 9 months.
Good. I want the retained earnings here. Who can help me? I want a mathematician. I want the retained earnings figure here where I've ranked. But whatever I have here is 3,000. But from here to here is 1,000. How do I get this side? I want the figure here. That's all. How do I get it? Help me out. I want a mathematician. I want the distance from here to here. This I want to get here, but here is 3,000. So if here is 3,000, that's the open balance. And here from here to here is 1,000. If I add, won't I get it? So I get 4,000. So the retained earnings here is 4,000. That's all. Or alternatively, I am here is 3,000. But from here to here is I'm here is 7,000. But from here to here is 3,000. When I take it off, I still get the same answer. So there are 2 ways of solving this question. And I tell the examiner that open balance, number 1, formula number 1, the open balance plus the pre-acquisition profit, or pick the closing balance minus the post-acquisition profit. That's all. You get the same answer, no difference. Answer near 4,000. If you here by 4, if you are so quiet 4. Wait. So go and place in A. Go over this. I deal with examine any paper. Your amount P and then the balance sheet, the money firm. Even when they give you balance sheet and they give you the profit made for the year, yes, that one I'll tell the truth. So let's go and put it in this 4,000. Workings number. So let me clean this side. We will corner the way to me and calculate and by force. Uba for date of birth share her mind 1944. That's my date of birth. Put it there. Simple. Eddie, I be marking wrong. Marking you wrong with a nicest figure is far better than any other figure. So you put it here 4,000, right? Now at the reporting figures, sorry, post acquisition, a reporting minus at acquisition to weigh minus weigh. Everyone was saying. Is what you get.
3,000.
3,000. The same as the post acquisition profits. And then when you get this one, who be a balance sheet in your manner, and now you go to the footnote. After this, then you go, these are coming from balance sheets. Then you go to the footnote. So if you're reading things in the footnote that will come to net assets, make sure that you have this one there first before you go there. It's not difficult at all. Let me be very fast here. And as far as I'm done with net assets, I'm done with the question. We any the backbone, we question we. Next item on the list, go and read the note I was reading. I stopped along the line. Note 2. Exam number 1 year. 1 year. Now they are the well, the fair values of the Paradise Limited net assets will liability equate their current amounts at the date of acquisition, with the exception of Paradise Property, when had a fair value of 8 million above. You see, if you're an investor, do you buy asset at fair value or book value? You buy fair value. It's even a topical issue. People prepare, they can ask you that why do we choose fair value? I think it's here. That question is here. Let me show it to you. That question is here. I asked that question. It's part of my theory question I asked you. Part of my theory question I gave you. Here's it. And you can't massacre. Explain why IFRS 3 business combination requires an acquirer to consolidate fair values of assets and liabilities. Then you fair value. Now you pay book value against book value. Book value, fair value is mostly reliable, much more than book value. Book value is subject to manipulations. Fair value are limited in terms of manipulations. They are reliable. It approximates the entity's economic substance. That's all. Fair value put more economic substance, much more than the book value. Entity fair value has 3 points. That's all. So in exams, so here there's a fair value gain. So there's a gain of what? 8 million. Place this gain at acquisition. In fact, they say the Paradise have not incorporated the fair value into its financial statement. It means that put it at acquisition and at report. They say it's above. That means the gain. So write the examiner fair value gain on property. We call it fair value adjustment. So the gain is what? 8 million. So let's go and put it there first. Tell the examiner. Because something fair value adjustment. I will say, oh, in that time, Asher and ye pan and yet a dorsal keke. Sadly, fine. Things that are not difficult, but there are many, is good because the more you do it, the more tips you get. It's far better than asking me just one question for 20 marks that you have no idea. So right here, property, fair value gain on property. Fair value gain on property. It is 8,000. Put it at acquisition at reporting. Put dash here. Friends online. any figure that you carry from your footnote and you place it at reporting, it must enter your balance sheet. So go to balance sheet and place it there. Property, please. Property, is it PPE? Which type of asset is it? Is it current assets? Is it goodwill? Property. Well, where can I place it? Property. Property, please. Where can I place it? Hello. Oh, I hope you're not PP. I hope you're not exhausted. Please don't give up early. Don't give up early. Don't give up early. It's too early. So plus 8,000. That's all. Don't give up early. Then you go and read the question again. It will create additional depreciation. The examiner have calculated it for you that the additional depreciation is 200,000. For the purpose of consolidation, this led to an increase in depreciation. Also, two treatments. Depreciation is 200,000. Bring it at acquisition. This 200,000, but we are dealing in millions and thousands. So cancel the last 3 zeros. So that will be 200. So go to still the net assets. Tell the examiner additional depreciation, or just write depreciation. Just write depreciation to avoid trouble. Sometimes they will let you calculate it. At acquisition should be dash. Bring the 200, you are subtracting. The same figure here come here 200. That's all. We are lesson. I'm done with that particular note. Whatever figure you place here, go to PP and go and put it there. So go to PP minus 200. We are done with that particular footnote. We are almost done with the question. Note 2, we fully. We are done fully. So we are done this one fully. No problem again. Let's go to note 3. You see, note 3, the policy of Kingdom Limited Group is value all property at fair value each year end on the 31st December 2019. An increase in Kingdom property has already been recorded. However, further increase of 1.2 million paradise property since its value at acquisition date as of the 31st December 2009 has not yet been recorded. Okay, so there has been additional fair value increase. So there's additional fair value. You've not recorded this. Record it. Tell the examiner additional fair value. Additional fair value comes here. Hope you are not confused. So somebody wrote this paper. So right here, additional fair value gain. Fair value gain, 1,002. Place it here, place it here. That's all. Here will be dash. Go to the P&L and put it there, plus 1,002. PPY, you show yourself, plus another 1,002. Please, I hope you are not confused. Slowly. Slowly. That's all. Then come and add it to the P&L OCI. At the OCI side, you add it there. OCI, you show yourself, here's it. Plus 1,002. You can close it and get 4,200. That's all. And the 2 teams by the time you are done, you are free to go. And if you don't get it right, it will affect a lot of things. So note 3 is also gone fully. You are done.
Please, I have some questions.
Okay, so kindly ask.
So then note 2. It said for the purpose of consolidation, this led to an increase in depreciation charges into bracket cost of sales of
Yes,
that
please.
amount. So won't it affect it if maybe it was charged already? I'm a bit confused there.
In fact, to affect cost of sales, you have to go down to cost of sales. It's true. Perfectly true. So to add to cost, so add 200 to cost of sales. You are totally right. So go to cost of sales and add it to it. So cost of sales is here plus 200. That's all. Did you get it?
Okay, thank you.
Good.
And,
No, sir, please
and
explain that one again, please.
Okay, so it created additional depreciation, depreciation. And examiner made us aware that we should charge to cost of sales also. We have to charge to cost of sales. Increase in depreciation. So, like anytime you revalue assets, it creates additional depreciation. And additional depreciation, you add to cost of sales. The examiner will tell you that add to cost of sales. So here, it's an expense that should go to cost of sales because you have the P&L. Did you get it? Depreciation is an expense. You go to P&L, either admin or distribution and the rest. But here, it will go to the cost of sales because the examiner said it.
Okay, sir. Thank you.
All right.
my second one is the one we just posted to, I think, the gain.
Yes,
Since
please.
it's going to the P&L, aren't we going to what's the word? Time apportion it?
No, for fair value gains, good. It's good that you asked. Fair value gains is not subject to fair time apportionment. No, not at all.
Oh. Okay.
Fair value gains is not subject to. Good. Let's go to note 4. We're almost done. I'll finish very soon. I'll leave. The rest are not other plenty. You see, Navy. The most difficult aspect is net assets. Make sure that's correct. If your net asset is correct, your good will be right. If your net asset is wrong, your good will be wrong. All right, so that is that. Let's go. Note 4. Kingdom made sales to paradise throughout the year. Once I do it back, it's a problem. It's a regular customer throughout the year, and it has consistently been 600 per. This one is a past question. This one is a past question. This one is a past question. Where can I show you this? It's a past question. 2016 November past question. This is 2016 November. 2016 November past question. This one. It's a 2016 November past question. Let me show it to you. After the class, I'll show it to you. Okay. Don't worry, after class, I'll show it to you. A 2016 November past question, I'm cover by. So they've dropped 2016 November past question in November 2020. Now also got to 2023. So sure, if the 2016 November or the average 2020 DR, 4 years interval minus 4 years, 2023 minus 4 years. What am I saying? 19. So 2019 November. I am a question. See, if we here for 2019 November, console question. Now show me some. Make sure it's all better. I say because this year I'm already understand. Target professional consult. Eddie guy are predicted say. The question about a November batch question on copy KDA. So November 2019, November 2020, and a November and a December 20, November 2021. That's the area your questions are coming from. Yeah, that general should look at mind. Yes, sir. Good. Question of this nature is not difficult. It's intra-group. You see, you can never sell to yourself in consolidation. Parents cannot sell to subsidiary and make profit. So, first of all, get me the total sales made at the post-acquisition. That's the first thing you must do. The sales were consistent throughout the year and every month 600 per month. Tell me How many months in a post-acquisition period? How many months? Post-acquisition months, ASN. How many months in a post-acquisition period? For this question.
Nine.
9 months.
So what will be the total sales in the post-acquisition period that were made between themselves? If 600 per month, 9 months will be how much? First, and that's
400.
good. Eliminate it. You cannot sell to yourself. In consolidation, parent subsidiary cannot sell to themselves. It is taboo, it is haram for them to sell to themselves. How do you eliminate it? Subtract it from sales, the same figure subtracted from purchases or cost of sales. So revenue here minus 600 times 9. Cost of sales here to minus the same figure. Will be a balance. That's all. That's the first thing you must do. We are now relaxing, then relax for a while. You come back again. Then you now come and check whether there was some of the goods remain in inventory. It will create what we call unrealized profit, because that profit will be in a group. So when you're done, read and see. Read and see. That question, they had a bargaining gain also. Yeah, I remember, and there was some intra-group, yes. That's that question. So now read the question and be sure whether there's what some of the goods remain. And the kingdom made profit what? Mark up. This is sales, this is markup. He brought it up. All these sales on all the sales, okay, on all these sales. A total of 1.2 million at a cost to Paradise of the Paradise inventory 2019 had been supplied by Kingdom during the post-acquisition. So how many of these goods are still in the inventory? 1,200 of these goods are still in inventory. We are interested in that. Find the profit loading on these goods and eliminate it. We call it unrealized profit. It's the profit loading on the goods left in inventory. So for markup, this figure is a selling price. Even though they say a cost here, the banner the confusion amount for. Now, buyer and seller, buyer and seller. They say it's a cost to the buyer. Yes, it's a cost to the buyer. It's not the same as the selling price to the seller. It's a selling price, but you can't selling price now. We are doing this because people will just take 25% of the 1,200, mark them wrong. So you have to gloss it out by saying 25 over 125 times 1,200. I'm sure this one you are much aware of this. So where will it go? Unrealized profit. Unrealized profit. First of all, calculate it to a 25 over 125 times 1,002. If you don't understand, let me know. What do you get? Two places. Number one, who is the seller? Subtracted from seller's profit. Number two, subtracted from inventory. Who is the seller here? Who made the sales? Seller's profit should go down. Here is parent, so group retainers should go down. If you have P&L, this is for balance sheet, for financial position. In a P&L, the entire one goes to add to cost of sales, add to cost of sales. So please do the calculation from what you get. Unrealized profit, 25 to 120.
240.
So 240. Oh, but I remember this question very well. It's November 2016 past question. Dito.
12,000.
So 240.
Is it 12,000 or 1,000?
It's 1,000.
Okay.
Sorry. I didn't see the 1,000. It's 1.2 million.
Okay, sir.
So first of all, add it to your cost of sales. First in cost of sales 240. Show working plus 240. Second, subtract it from inventory, the group inventory. Go to the balance sheet. Balance sheet was the inventory figure. Inventory here minus 240. Wait. Then group retain earnings. Yes, please.
Target. Please, you said we should add it to our cost of sales.
Yes, please. Because it's an expense.
The unrealized. Should less it for my inventory.
Yes, please.
Thank you, sir.
Okay. So what do you get? So we are done. Now, left with the last working. That one is under group retainers. When you go there, remember you put place it there. So you see, as and when you do a workings, post it. Don't wait for them to say 15 minutes more, and then you now posting it. It's not advisable. Oh, let's go. So I'm done with this footnote. Note 4, echo. Yeah, we are no. If you are not done with all the footnotes, do not close your net assets. Net assets, you close you. I just say where you footnote, don't close it too. Because if you close it and something will come and affect, Uber cancel. You will cancel this. So please don't close it for now. Finish all the footnotes. Note 5. At 31st December 2019, Kingdom Limited had a trade receivable balance owing from Paradise. Oh. This examiner is taxing everything. The examiner is taxing everything. Why? This examiner is the type of people that when they're acquiring, they don't stop. They start morning, they finish the next day morning. They don't stop. You start questioning like footnote plenty, everything plenty. Why? We don't have a choice. We will solve it. Let's go. At 31st December 2019, Kingdom Limited had a trade receivable balance owing from Paradise Limited is 2.4 million. However, this did not agree with the trade payable of the Paradise as a result of payment because it's one cash in transit. Cash in transit is the same as goods in transit. How do you treat them? Just or CBBR or CBBR. Okay, let me do the cash in transit for you. How do you treat cash in transit? You see, we're supposed to eliminate the receivable. Let me make it clear for you how we treat it. Get it clear for me. Right here, trade receivable. Right here, trade payable. When parents sell to the subsidiary, parent in a parent, this for parent, this for subsidiary. So imagine parents have sold goods, let's say 40. Parent record it as receivable, subsidiary record it as payable 40. Normally we call it current account. If you see current account in consolidation, it represents amount owed to each other. It represents amounts owed to each other. That's all. All right, so now let's continue with the game. Now, if the parent account balances, we will eliminate them. This one, it must be eliminated. You cannot owe yourself. So whatever amount you owe must be the same, but sometimes it doesn't balance. Let me give a quick example. So imagine that subsidiary 3 days to the year end, he signed a check of 15,000 cedis, check of 15,000. So let's say 15 cedis to pay part of his debt. How would a subsidiary treated this account in his book? Tell me. Won't he subtract it from this amount now?
Yes, please.
So now you record 25, right?
Yes.
And then you also subtract from his cash, true or false?
Yes.
That's what subsidiary will do. Now, this is not balancing with this because the parents have not received the check and this money is still in transit. It can be goods, it can be cash. They have the same netting of. So at the end of the day, parents say, look, please, I have not received the money. You're owing me 40, where from the June 25 that you are owing me? Oh yeah, it's oh, parents, you know what? I've remitted some cash, a check. This is a copy of it. I've scanned it. Check the mail. I fire a mail there. I fire a mail there. Email. So check your email. Copy of it. So okay, I've received it. So here we assume that parents have received it. At the time that you are doing the work, no. So if parents have received the money, what will parents do? Number one, first treatment. Parents have received a check. 2 entry. Tell me the 2 entry. We are going to assume that parents have received it. What happened? First thing, what will happen?
Reduce the receivable.
Good. So parents will subtract. So subtract this figure from receivable. America saying 25. That's the first working. Number 2, when parents receive the money, won't he add it to his cash balance?
Yes, please.
So add it to parents' cash plus cash, 15,000. So now 1125. Now you now eliminate the entire 25 from all of them. So now what you have to do is that it means we are subtracting receivable, we are subtracting 15 and subtract 25. But from payable, we are subtracting only 25 and add the 15 to cash. So now let me narrate the story for you. When you see cash in transit, when you hear cash in transit, what you have to do is that number one, just add your cash in transit, add it to the cash balance. Number 2A, subtract the receivable figure from receivable. What receivable? The receivable that the parent owe and the subsidiary owe from receivable. Then the difference between these two, this is 15, this is 40. The difference between these two is 25. Subtract that one from payable. So 25 from payable. That's all we are done. Only this. So everything I've illustrated here is this. So let me go slowly and solve this question using that. So number 1, who is Kingdom? At 31st December, Kingdom Limited had a trade receivable owing to Paradise of 24. However, this did not agree with what is in the Paradise book as payable. And as a result of a payment of 800 that made in December 2019, which did not reflect in Kingdom bank account until 4th January 2020, assume that he has received it. Number 1, add this figure to your cash. Number 2, subtract this figure. But number 2, subtract this 2.4 from receivable. Number 3, difference between this and this, subtractive payable, and that's all. Don't think, no two ways about it. Don't go over. First, add the cash in transit to your bank account. First thing. Second, subtract 2.4 from the receivable. Third, the difference between this and two, payable. So let's go. So first, add 800 to your cash. To cash in mono. Question the overdraft. No, question is a bank overdraft. Thank God overdraft for the subsidiary, not the parent. Thank God. So go to your bank, your current assets. Add the figure. Current assets, the figure is parent. Go to overdraft. Parent was having overdrafts. Or there's no overdraft. So can we use to reduce some of the overdrafts? This one we bringing it under cash. Which one do you want? Anyone is right. Can we use it to reduce some of our overdrafts? Or we should record it on its own, right?
Yes,
Let's record it on its own. But ideally, the marking scheme, then you'll be reducing with the overdraft. If you do this way, you are right. So add it here, 800. First thing, you add 800. When you go to your closing, will be 1,004. Second, subtract the entire receivable is 2,400. Subtract 2,400. So they say 2.4 million. Subtract. And this way, please, I need the answer for this. You are done. Second, the difference between this and this. What's the difference between this and this? This and this. 2004 and 800. What's the difference? 24. What's the difference?
So your question again.
The difference between 2,400 and the 800, the cash in transit. You let that one from payable. So 2,400 minus 800, what do you get?
1,006.
1,006. Okay,
600.
So go to trade payable and less 1,006 from it. Close it. That's all. Get me the answers. Push them there. And we are done. We have to balance this question before we leave here. It's one of the dangerous questions in the ICA. Why they repeat a dangerous question like that? November 2016. D2. Is it one taba or no, not Agunan taba? I want to remember the name of the question. I want to remember. Okay, so please get me the total payable figure. We are done payable.
You're done payable. Okay.
And receivable too. I'll finish soon. As soon as I'm done with the last 2 minutes.
Sir, are you from Savannah?
Come again.
Are you from Savannah? Are you from there?
Yeah.
Yeah, okay. That's what I wake up.
Yes, I'm from Agunan Sabah. The paramount chief over there is our family member.
Oh, okay.
And we have a stew over there.
It means you've been coming here.
No, since 2015, I've never been there. Even my grandfather have passed just last 3 days. I don't think I'll be come for the funeral.
All right, that's what I am.
Hey, Aguna Sabah. That's my hometown.
Oh, okay. All right.
Wow. That's so interesting. Wow. But I come to Sweden most often. I have some project at Sweden, so I normally come to Sweden, but I don't come there.
Oh, okay. All right.
I can even move from Oda, Kofobia to Sweden without passing through Sabah.
Oh, okay. All right. It's a bit one day.
Yes. Okay. Now, but how do you know that I come from Sabah?
Because already you mentioned Pukwa, so the MP for Aguna East means. I remember some time ago you mentioned
it. So yeah. It's my good friend Mampoke Soya.
All right. Okay.
Let's go.
Like, he's very popular here, pa. I say she be on the seat for the more than 12 years.
You see, for him, you don't worry. This one after class, it's because of his husband soldier. She don't know that no those secrets.
Oh, okay. All right.
Okay, so that is that. Now I'm done. Please add the trade payable for me, okay? What do you get for your trade
So
payable?
12,400.
And then the trade receivable. I want to balance this question fast when we go. And you sit down, you go through over and over and over and over. When we open and solve a question, there be.
Okay. 12,000, sir. Trade receivable.
12,000.
Yes.
Not agree. Oh, okay, I'll agree. 12,000. Sorry. Okay, so we are done with that footnotes. So I'm done with how many footnotes am I done? Hey, I'm done with this one too. This one, we are this. Oh, who examine that? This one on testing BBLB. Kingdom Limited on December 2019, the last day of the year, accepted 1 million 10% loan note from Paradise Limited. This one, 10% loan note. Is it 2 million? It's supposed to be 2 million, because me, 1 million. Supposed to be 2 million. There's a typo error somewhere. Okay, but let's just solve as it is. They say 1 million. Let's use the 1 million. You see, you cannot loan to your own self. Please take notice. Parent and subsidiary are one. You can't give yourself a loan. You can't give yourself a loan. You can't give yourself a loan. And that's all. So here, go and eliminate it. It must be in a way a simple two treatments. Go to the subsidiary's loan, subtract it from there. Go to parents. Parent investment, subtract it from parent investment. 1 million, that's all. Doesn't go anywhere. And thank God the examiner said the loan was given when? 31st December 2019, the last day we are preparing the account. If the loan should have been given somewhere middle or at the start of the year, they'll be charging interest. We'll charge interest, but here we'll not charge interest because the loan was given right what at the end. So at the end there's no interest accruing. True or false? Did you get it? The loan was paid the last day of the year. So that means no interest will be paid for that particular year. If the loan was paid in the middle of the year, interest would have accrued because of these dates. The examiner loves us so much because he has seen that for me tough time. So some of the things, just go and subtract. So go to parent, and the parent to be under his investment. So go some investment. We go to non-current assets. One question, go to non-current asset. Non-current asset, where are you? Non-current asset, where are you? We wrote 10% loan. Good. Subtract 1,000 from it. 1,000. That's all. So put it here, 1,000, you are done. For parent, it's an investment to him. Go to the subsidiary. It will be a loan. So go to loan. Yes, 10% loan note. Subtract 1,000 from it. You are done. Close it. So 6,000. That's all. We are done with that particular footnote. Nothing difficult here. So you are done with this footnote. Maybe. You. 9 footnotes. Why? No. This is unprecedented. This is unprecedented. Thank God it's a past question. This note is not part, so now let's read these two notes, then we are done. Just two notes, and then we are done. Please, let's kill it, okay? Let's kill it. I know that some are sleeping. Please, wake up. This is not the time. It's too early. Our Zoom is AI Zoom. It can detect everything. Through our Zoom, you can use it to on your camera. If your microphone is muted, we can use our AI to unmute it. So please, yes, those who are dozing off, please. It's too early. Let's finish it. Finish it. At 31st December 2019, goodwill that arose acquisition was impaired. At this stage, you pause. Now go and complete all your workings. So now we are done with everything. From here to going, we have fed goodwill. So go and close your net asset workings. Go and close your net asset workings at this stage. We are done. We call it Egbena. Egbena. Add everything for me. Let's go. Now add the easy side. This side is very easy. 2,800. This one 18,000, 4,000, 22, 30, 31, 31, 200 or so. Please add for me, help me out. Oh, this one we are done. As long as we done this one, a real question. Yeah. It's coming home.
$31,200.
That's all. You add or what do you get? 1,000, 3,000. So that would be 34,000, right? If my memory was setting right.
34,000, sir.
Good. That's all. Okay, so we are done. Right after this, do your goodwill. Workings number 4. Standard workings number 4. Goodwill. Can I clean this page? Standard workings. Oh, or I should leave the page, right? Because you may pick something from here, right? Standard workings number 4. Goodwill. There are 2 types of goodwill calculation. Here we have this is a full goodwill. Go and read the question or the requirements. The notes, let them tell you how they calculate goodwill. It is a policy of the group to value NCI at a fair value. That's all. That's the full goodwill method. This is a fair value. The same as full goodwill method. That's all. Full goodwill method. Over here, this is the formula. We start with the NCI at acquisition. Now they give you the share price of the subsidiary. If you see the share price of the subsidiary, NCI will never be given to you. So use it. So that's the share price of the parent. NCI value will not be given to you. So get the number of shares that the NCI team they hold and multiply by 2.5. That's all. So here, let's go back again. If the number of shares is 18, parents have acquired 60. NCI, what will be the NCI share of the number of shares? How many shares will NCI hold? Want to be 40% times what? Times 18,000. Did you agree? Oh, so it's like I come in times 18,000. This is what you get. This is the number of shares for the NCI times the share price. 2.5. That's all. That will be the NCI value. So the goodwill is the difference between what the parents pay and then the net asset. So start like this. Right here, fair value of the consideration. Cost of consideration paid by parent. Consideration paid by parent. That's workings number 2. Go and bring it. So workings 2 was the total for workings 2. Well, this workings 4. Workings 2 is here. Workings 2, I show yourself. Workings 2. Yes, it's 24,300. Good. 24,300. Then what do you do again? Fair value of NCI at acquisition. Open a bracket. Say 40% times 18,000 times 2.5. Please, what do you get? What do you get?
It's like
18,000.
18,000.
Come again. Okay, this is
18,000.
but not 1,008, right?
No, it's 18,000.
And your final answer is it's also 18,000.
Yes.
What the wow. Yeah, it's true. Or 40% 0.4 times all this be 1. So 18,000. Please add or what you get. Call it total consideration. Total consideration. We'll finish, okay. By 10, you have to move for me. I have a class from 10 to 12, and then 12 to 4 a.m. 4 a.m. to 10, 11 to 4,
Hey, so what time will you sleep?
and 4 to 10 p.m. So my last class is on tomorrow 10 p.m. From now, from this morning up to tomorrow 10 p.m. and now from 12 again. Yeah. So let's go fast. This what do you get?
42,300.
42,300. Then you say
Yes, sir.
last net asset at acquisition. We question now net asset at acquisition. Acquisition figure, net asset acquisition. What's the net asset at acquisition? 31,200. Good. So less, what do you get?
1,300.
That should be 11, plenty 11, right? 21, 1, 1, 1. Is that so?
Yes, it's
Yeah.
correct.
Call it goodwill at acquisition. This goodwill is at acquisition, not at reporting. Acquisition. Less impairment. Look for the impairment figure. Impairment. Then you get goodwill at. So let's go and pick the impairment. That's the last footnote. And that's so hey. When you get to this level, somebody balances console. That console wasn't difficult at all. It was football console. 2017 May. Somebody balanced it, had 20/20. Unfortunately, that person couldn't pass. He balanced it. That console was very easy. If to that console, we are done a long time. What's the goodwill? Impairment on goodwill. Note number, they say something here. It's on at 31st December, goodwill arose acquisition was impaired by 1 million. Kingdom has policy to treat goodwill impairment as part of admin. So add this figure to admin, subtract it there. So let's go admin and close admin figure. So bring it here, 1,000, subtract it. What's the goodwill at reporting? So say goodwill at reporting. That'll be 10,100. The thing is not difficult, but a dose is many. And that's all. And then double underline. Take this impairment to admin, take this one to balance. So let's go to admin. Admin plus 1,000, admin plus 1,000. Admin, where are you? Plus 1,000. Admin plus 1,000. Admin is here plus 1,000. Close it, we are done. 7,000 plus this, close it. Distribution, there's no note affecting distribution, close it. So start closing some of them. Now you can start closing some of them. So I'll come and take your figure. Take the goodwill, final goodwill figure. Goodwill figure of 10,100 to the balance sheet. So go to the balance sheet and put goodwill there, 10,100. So workings number 4, 10,100. Start closing some of them. PP, we are done, so you can start closing them and put the answers there. Let's do the last working for the day. Thank God. No, 11 last 2 workings, then we are done. Be on pound. Please, this November, we want our award. We want our award. Which paper can we get? I want somebody to get award for advanced audit for me. You'll be learning marking skills. Which one again? Advanced audit alone, yes. Come on, you can get. No. Yes, we can get. Which one again? FR. Yes, FR, we can get this team too. Man account you will get. PSA will get. All the papers you will get. Okay, so we are done. Last but one working, then we are done for the day. The remaining IFRSs, hard in the course of the week, I may schedule a meeting to treat it with you. And then the final account, I'll give you the area to look out for. Do a cash flow one, and then do SANA and the 1 P&L. That's all. I will send you solution of those questions that I will ask you to do. Hey, I don't want to promise again because I promised a lot of people materials. And I'm not going to sleep now. Now, next workings number 5, NCI at reporting. NCI at reporting. The one I'll go to balance sheets. Start by saying current saving. Right here. Right here, fair value at acquisition. What do you get? That's what you cover the goodwill. Fair value at acquisition is here, 18,000. Come right here, 18,000. What do you do again? You now add share of post-acquisition profits. Share of profits. Open a bracket. What's the post-acquisition profit? Yes, the net has 2,800. NCI share is what? 40% times 2,800. Please, what do you get?
1,120.
1,120. Good.
Yes, sir.
Less impairment. That's impairment is 1,000, so multiply by 40% of the 1,000. You get 400. Take it off. What do you get? We are done for NCI at report. Straight to balance sheet. Level last work, we are done. What a question.
Let's copy.
Come again.
A minute, so we can copy what you've done.
Oh, okay.
Okay, please. What at acquisition? DT, I can't see your writing.
Fair value at
Yes.
acquisition.
A fair value. Okay, thank you.
Fair value at acquisition.
Impairment.
Fair value at acquisition. Please, you have to go over. We have more days for the exams.
Okay, so
And they don't
18,000 minus 1,000. $18,720.
18,720.
Yes, please.
720. So go and put it in balance sheet NCI to report in balance sheet. Where's the balance sheet NCI? Here's it. This balance sheet NCI. So 18,720. Let me the last work and then we have this question. 18,720. I hope you have touched everything. What do you do again? You now go and last work is
Where did you put it?
on a balance sheet, NCI on a balance sheet. So after the equity, after the group retained earnings, there's some NCI on the balance sheet, right?
The group.
Workings 5 is working 5 or so. Yeah, workings 5.
In between the retained earnings and the non-current assets.
Non-current liability.
Non-current liability.
Yes, please. Right after group retained earnings, that's the next item I have to write.
Oh.
The last workings for the day is group retained earnings. Please, balance sheet, follow this. It's a standard workings for balance sheet, standard workings. 6 workings. Now, if we get ample time, we can okay, so workings number 6, group retained earnings. That's the last workings you will do. I hope I'll not forget everything though. Group retained earnings. Exams try and be very fast. It's not everything that you can do under exam condition though. No. First, write here parent. What's the parent name? Paradise or Kingdom? Write a parent name here. Kingdom.
Kingdom.
Don't come and write parent with that marks. Go to the balance sheet and pick parent retained earnings. That's all. What's the parent retained earnings? On the balance sheet, parent retained earnings is what? 12,600, right?
12,600.
Good.
Yes, sir.
So 12,600. And right here, Paradise. Paradise. That's a share, parent share of Paradise profit. Paradise profit, post-acquisition profit is 2,800. Strike 60% on it, that's all. Paradise owns, strike 60% on it. 60% times 2,800. What do you get?
And we pick this 2,800 from the post-acquisition.
Yes, please. Post-acquisition changes in net assets. What do you get?
Oh.
60% on this.
A minute. $1,680.
1,680.
80.
1,680. 1,680. Good. Then you write here less impairment. Impairment, open a bracket, 60% of the 1,000. What do you get? 60% of 1,000.
600.
Then is there any PUP, unrealized profit? Parents made a sale, right? Unrealized profits. We calculated it by 25 over 125 times 1,002 or so. You had 240, true or false?
Yes, 240.
Then we also did something, we call it unwind of a discount. Unwinding of a discount. You had 203 or so. Let's go. It's after note 2. This one, parent profits. Go to parent group, retained earnings. This one goes there. 203. Which one again? That's all. I'm done. You sum everything up. What do you get?
$13,237.
13.
237.
237. Okay, so let's go and put it in the group return earnings. Then let's start adding the balance sheet together. I want to balance the balance sheet for the rest. You can go and add, and go. Go to the balance sheet. Balance sheet. What's the
237. Retained
what
earnings.
is return earnings? I can't see it. Where.
Under the
Yes.
revaluation surplus.
Workings number 6. Come again. The answer is 23.
13,237.
This revaluation software is 4,000. Just bring it to no figure. Add all this. This one plus NCI 18 720. What's the total?
13, and the share capital 46. Add everything. Okay.
Mm-hmm. What do you get?
$58,837. 58,837.
Then let's start add all the current liabilities or all the liabilities together. All the liabilities, one logo line.
Wow.
Or as and when what they did.
1,004. Inventory.
Mhm.
Please, can you go up for me to check the equity figures again?
Come again, the equity.
Yes.
41,600 plus 4,000, 13,237.
Okay.
Then plus the 18,720 at the back there.
Back way.
That's the NCI figure, the one on top here. It's part of equity. This one,
Okay. And the group retain earnings.
just the group return, and it's all of them are equity.
Okay, then I think the total is wrong.
Oh, okay, then let's recalculate again. So first 41,600
Yeah.
plus
1,600 plus
Plus
4,000
plus 13
Plus
to
plus 13,237
237 plus
plus
18
720.
720.
It's true. It
Okay.
is true.
I've not added the 18.
Yeah.
58,
So please, what do you get?
837 plus 18, 720.
Mm-hmm.
77,557.
Yeah.
77557, right?
Yeah.
Yes, sir.
Put all the liabilities together for me. All liabilities 6,000, 12,400, 18,004. Everything here.
$28,503.
28.
503.
So this is total liability. Add this figure plus the equity figure for me. What do you get?
Okay. Ten 60 60.
Hey, no space. We are done. So 1060.
60.
like this.
Yes, sir.
I'm not agree. Oh.
So I think we should add the 77,557 to the
Yes.
28,503.
Yes, it's correct. So 106060. It's correct.
Okay, good. Let's go to that same slide. Assets, give me the total of PPE.
Total of PP 74,200,000 to Abi. Yeah. So,
Total of non-current assets.
Goodwill.
Goodwill figure is 10,100.
Goodwill is 10,001. Okay, so 74,200. Yes, then 85,300. No, are we doing the total? 85.
No, the total, yes, non-current liability, non-current assets.
Okay, so plus 10, 12,000 plus 1,400.
Is what you get. This should be 300. So 84, 300. That's
85,300.
85,300. That one I
good.
got.
Add all the current liabilities also together for me. The bank is 1,004. This one is 1,002. This one is what?
Oh, okay, inventory. Inventory will be 10,760.
What do you get for inventory?
10,760. Yeah,
Is it like this?
760. 06.
Like this.
Yes, sir.
Now put all the current assets together.
Okay.
Please add all the current assets. What do you get?
10,9460.
What do you get?
10,9460.
For the current assets,
Yes, please.
I think it's more because this is 10,760 plus 12,000
Mm-hmm.
plus 1,004. I got
Mm-hmm.
24,160.
Yeah, 24,160.
Are we adding to the 85?
No. It's 10,760 plus the 12,000 plus 1,004.
Just that.
Yes, just
Yes.
the three.
Now
Okay.
then add. This is 24. Once it's then you now add it to 85. Later on, then you add that becomes total assets.
Mm.
What's the total asset? Add this one to the non-current asset. What do you get? So 24
One,
Mhm.
109,460.
What's the difference?
109,460.
Okay.
A difference of
3,400.
oh, we didn't add one figure. Yes, it overdraft.
Ah,
3,400.
yeah,
So
the
please
overdraft.
really add it to it.
Current liabilities.
That means
The
it will
back
affect.
overdraft is 3,400.
3,400, yeah.
So now it will affect the
The
current liability.
balance.
Given the
Yes.
current liability. But the marking scheme will balance with a different figure because some of the items they will have a different treatment for it, but you are not wrong, they are not also wrong. What you understand is what you do for us. So give me the total answer for current liability and current the other one too. So I'll give you some few questions for you to try and answer on.
So the total liability is now, I think it's 31,900.
31.
Please hold on. 31,903.
31,903.
Let me double check.
They now added to 77,557.
I balance it.
This is what you get 109,
Yes.
109.
Hey, hold on. What am I doing?
Let me just go and copy this one. What is this? So this is that we are not done with the P&L, but we have finished the balance sheet. Okay, so the P&L, everything left, just add, and post it there and find the answer. That's all. Okay. P&L, add everything. Add everything. That's all. We are done. So now this question is well treated. I don't need to stress you too much. Let me give you your areas and go. Yeah, you get a cash flow question. Solve one question in the book. It's called Sana. I'll show you the solution. I'll show you where the solution is, and then you put it on the page. Sana question number 2. You do Okushi. The cash flow is not Sana. No, cash flow is Haruna. November 2017. Solve that one. Haruna. Then Sana is redraft. All of them are in they are in the intervention kits.
Please,
Solve
what's the
them.
number 2?
Number
Second one.
Sana. Let me show it to you here. Let me use the book to show. The book is ready. It's in this book. This intervention kit, the one I sent to you. This is it. Go to This is the question. Siane and Brekum. Or anyway. There's a question. Your question is November 2016. So I didn't bring it to you. Look at another question again. Plenty notes. Why? It's in publication. You solved the first question for me. No, then this is the Binkabino. This one is quite as you know. Yeah, this is Sana. So question 10, Sana. And then Oforusua is cash flow. Do this one also for me. The cash flow for sure. Solve it. I'll send the solution for all these selected ones. That's all. That's all. Ratios, are you not a ratio to your own? All right, so if you have a question, kindly ask. I'm done with the entire. Left the IFRS is the standards. Do IFRS 15 revenue, borrowing costs, do earnings per share. You still get the question of IFRS 5. Grant won't come again. And IAS 2, inventory will visit you. Inventory and taxation. One they have to visit us. I'm done with everything. I wish you all the best. If you don't hear from me again, if you have any issue, please contact me. Let's solve it together. And good. Please make sure that you come and do your corporate reporting with us. Please, level 3 corporate reporting. Okay.
Please, let's see you again before we write. Why?
Come again.
Let's see you again before we write.
From here, today is when? Today is
Monday.
Monday.
Mhm.
So today is Monday. I have to see you for the IFRSs. At least I have to come and do. I have to meet you twice to scan you through all the IFRSs, and another one scan the final accounts, the cash flow, and of Orusua, those ones, the final account. That then I do. When I do that, it means you can get the best student for me.
Thank
But
you.
here is the case. I have a class from 10. I'll start at 10:30 because now I'm supposed to start at 10. 10:30 to 12 midnight, I have an FM. And from 12 midnight to 4 a.m., I have advanced taxation class. From 4 a.m. to 10 a.m., I have man accounting intervention. From 10 a.m., 11 a.m. to 4 p.m., I have public sector PSA intervention. 5 p.m. to 10 p.m., I have financial management. Then I'll break 11 to 1. I have advanced audit. From 2 a.m. up to 5 a.m. I have advanced tax. Yeah. And when the day break 6 a.m. till 10 p.m. I have financial management.
Hey.
Yeah. So that's why some of you, when you send a message, I can see your message, but the reply has not yet in your mind.
Sir, sir, can you make the IFRS 15 available for us too? The contract from the revenue. The video can be available.
Okay, I wanted to treat it. I'll treat it.
Oh, okay.
So be on standby. I'll treat it. I'll find some 1 RB. I'll come and do it. Sharp.
All right.
Let me go and find something in small, something light to take in for the next one. Next class at 10:30. I have 11 minutes. Okay, so I wish you all the best. You really done well, and I wish you all the best. All the best. Solve the questions very well, and you don't need to worry. Please promise him that all of you, I'm seeing you at corporate reporting. Please.
Definitely.
I'll see you at
Thank
corporate.
you.
Yes, please.
But sir,
Thank you.
say target.
Yes, please.
Please, can you try and upload the video for us?
This particular one.
Yes, sir.
Okay, no problem. It's on the portal. I'll put it on the portal. So if you have the email, it's through the email.
Okay.
Any other question? And then the area, this area I've not given you. So on this is which question would you bring?
Yes.
I've given all the areas to you. You get impairment again, you will get impairment, level 2 will not get impairment. And that's all. So let me run away and search for something small to put.
Sir, hello, sir.
Yes, please.
Yeah, the last you said also we should also concentrate on the financial instrument too. What about that one? Shall we still continue?
Yeah, I'm still on.
Okay.
I'm still on. So look at them careful for me. And then we move. But don't forget the catchment areas. Your ethics. I've not done conceptual framework. Then I've left it for you. I have the theory in your book. The book, please read the book very well. The conceptual framework. The question is inside that particular book, that particular material I gave you. This particular one. If you don't have it, we did it in the morning. If you're not able to attend the morning class, let me know so that you add your email to I'll add your email to it. And that's it. I want someone that is doing advanced taxation, advanced audit. I want someone to win award for me. I'll go to advanced tax for award. You'll be given the marking scheme to learn for award. Where is it? I'll be on and I see your comment and call me. This particular one, is this one? Yes, this particular material, please hold this material like a gold. Solid. All your theory questions are inside this material. This one. If you don't have this one, let me know. I've shared this on the page. These are your conceptual framework. So go through this question careful. I can show you where all your last 18 theory questions were released from. Substance of a form came last 18 and it's here, D2. That question is here. Let me show you to you. Substance of a form. Here's it. This question came for last 18. 5 marks. Importance of substance of a form. Then which one again? All these questions, please look at them for me careful. Ethics is also here. Conceptual framework is also here. Then you see, because we have a limited time in class, we cannot do all. So that's why we compare this one for you on your spare time. Now who can. So I don't, unfortunately, I didn't add a solution to it. Yes. But I don't want to promise you anything. I don't want to promise you that I will send you solution. I'll send solution. Because I promised all the classes I have handled now, I've not done it. And if I don't do it, they'll start querying me. So I'm done.
Thank you very much.
All right, this number 1. Okay, so thank you very much. Let me run away and go and find something in before the next class. 10:30, look, I'll boy you. I'm 5 minutes from Munchen. All right. So thank you. I'll see you when I see you. Goodbye. But please just be attentive on the page. If I see anything, I'll come there. If I hear you in town, I'll come and put it there for you.
Okay.
Okay, thank you.
Thank you.
The intervention, we've just started. And to write the exams, we are not sleeping. Goodbye, everyone.
Goodbye, sir.